Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, good morning. Happy Friday. Welcome guys. We're going to get started in just a couple minutes, just setting up the YouTube, and we're going to have a fun Friday session in the markets. Please use proper risk management, and we'll go over gold, Nasdaq and US30. Thanks guys. Just a couple minutes, we'll get started.
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey everyone, welcome to Stock Sniper Trading. Thank you everyone for joining. Happy Friday, Good Friday. Eid Mubarak to those that celebrate. Welcome guys. It's almost 7 a.m. Eastern, and it's Friday, March 20th. And this is our live New York session where we come in a little earlier in the markets on some days. Probably we're going to do the same thing on Monday morning. We'll come in early and we'll get started and see how the week is moving. But now it's wrapping up the week. We're going to do gold. We're going into COMEX, and then we're going to switch over and do a little bit of Nasdaq and US30 going into Wall Street. Okay, guys? It is Friday. It is the end of the week. So just please use proper risk management when you're trading, especially going into the weekend. Everybody should have been reviewing how they've been doing this week. Some of you guys are learning, right? Some of you guys are still in demo account learning. That's fine. Have you guys learned anything new this week? Some of you guys are trading your own money or a prop firm. Have you excelled in that this week? Are you in drawdown? And everyone is in a different situation, but hopefully we're all learning and you're improving on your mistakes. That's what trading is. And every day you get better and better and better. And with more experience, you will start to understand how to do this on a daily basis and get more consistent. Okay. So we will get to the charts. We'll do our top down in just a moment. I just want to say to everybody, to all of the Muslim brothers and sisters out there, Eid Mubarak to all of those that were fasting this entire month. It's over. You guys get to now celebrate and enjoy the time with your family and friends today and this weekend. I wish you blessings upon your family, and to all of our Christian brothers and sisters out there, Good Friday to you guys as well, and wish you blessings as well to you and your family. And I hope God is good to all of us. Okay, guys? So moving over, okay? So just looking at today's news, not much going on. You can see that the Europe was really quiet news-wise, very low impact. We start to move into 8:30. Normally we see a lot of US high-impact folders here. It's all Canadian news today, Canadian core retail sales, and a few other folders. I'm not too concerned about the Canadian news. We're not trading the Canadian dollar. Unfortunately, I know some of you guys want to trade the Canadian dollar. but I don't really intraday trade or scalp the Canadian dollar. I more look for quality investments. Like anytime it comes down to parity, if you guys remember Canadian and Americans at that time back in the day, that's a good time to load up. And then when the American dollar appreciates, you can get 20, 30, 40% on your money. So that's a way how to really invest on the arbitrage between the two currencies. So nothing going on today. We're not gonna, it's just gonna treat it as a typical Friday when you are trading. Just be careful for the volatility, okay? Earnings, again, looking just in the pre-market, nothing going on. I don't even know what these names are. Like, to tell you the truth, Xpeng, Emergildo, like I don't even know what these are. I'll be honest with you. Everyone thinks that I know everything about every single one of these companies. I don't, guys. I don't pay attention to these because I don't trade these. I don't think these little companies are going to affect Nasdaq, Dow Jones, or S&P 500. So nothing to look at here. In the after hours today, you guys know Friday after hours are very light on the earnings. Markets are closed. We have no earnings. So earnings and news today, we don't have much going on, okay? Just our day-to-day news. Elon Musk, robo-taxi, Tesla is in the news. U.S. stock futures sink as oil turns higher. So remember, guys, things escalate over the weekend, over Friday nights, Saturday, Sunday, when markets are closed. Pay attention to what's going on in the Mideast because the way how markets open up Sunday night can be affected with what goes on in the Middle East, okay? And if you're going to be holding any positions over the weekend, whether it's stock market positions, whether it's gold, whether it is oil, or any other security for the matter, just understand how much risk do you want to go into the weekend with, because if something happens and it opens up against you or opposite direction or gap up or gap downs against you, you don't want to blow up your account. Okay, so this is now you got to consider sizing and if you're going to hold into the weekend any security. Okay. The U.S. government over here, they call this guy keg breath over here, $200 billion. They're looking for the war in Iran for additional taxpayer money. So Americans, you guys got to pay for these wars. You know, you as a taxpayer, this is where your taxes are going. You know, when they say America first, I don't understand how this is America first, but this is how wars are, guys. This is not the first war. You know, I've been born in 1982. I've seen a couple wars in my days as well. There's some of you guys that are older than me and have seen other wars, but this is the world we're living in, unfortunately, and someone's got to pay for it. And it's you and I who pay for all this stuff. So this is in the news. Supermicro co-founder charged with sending AI tech to China. Okay, this is in the news, could have a negative impact on SMCI. We'll keep an eye on that. Iran keeps striking Gulf as Israel pledges to spare energy sites. So guys, just over the weekend, you're going to be paying more at the pumps. Okay, already over here in Canada, I see that they've gone up, and I have to, all of my vehicles are premium fuel. So I have to pay extra for that premium. It is over $2.10 a liter over here in Canada. So the gallon in the US will be over $4 a gallon, and crude oil will be, or not crude oil, I'm sorry, diesel will be over $6 a gallon in the US. And you will be paying for that at the grocery store and everything. So it sucks right now. It sucks, guys. But just conserve your money and needs and wants at this time, okay? Until we get through this chaos. On Discord, guys, we sent out a couple signals. There was one on the oil yesterday, so you can see the oil. This area we were looking for buys, $96.25, $96.28. You can see how it built off of there, came back down again, a wick. There's support, and then it kept accumulating, creating higher lows. Then finally had that explosive move coming out of there, and that's a good move for 400 pips building. Diddy, he likes this. He's all about oil, so he enjoys that himself. And guys, we just sent out a signal right now before this call at 6:25, a sell signal on gold below 46.52, and it ended up pushing for approximately 130 pips, okay? I can break this down for us because it's real, it just happened, and I can break it down and let you guys know if you went in ahead of time, if you waited for closure, things like that. I'll break that down for us, okay? And we do send out signals on indices, and just a trader note, today is a Friday flush risk. If the DXY, that's the US dollar index, pushes above 100.50, that's a very psychological number that we've been talking about this entire week, expect the morning's indices bounce to be sold aggressively into the weekend's close, okay? So if you're trading later this afternoon, understand power hour sets itself up for maybe how things close going into the weekend and how things can open up after the weekend, okay? And guys, there's a free Telegram link to everyone on YouTube. Thank you guys for joining. 150 of you guys. If you guys can hit the like, subscribe to the channel, join this free Telegram. It's pinned at the top of the channel right now with those alert buttons. And you get all of our live coming up YouTube sessions, trade recaps of Dave in the private Zoom room with the New York sessions over here with the snipers. Your feedback, guys, we do post that. Thank you guys for all of the positive comments, and before and after of trade setups that we do take and set up here for you guys. And not all trade ideas are 100%. You got to understand how to learn how to use signals, whether it's us who are helping you with signals or any other signal group for the matter. You know, you don't just enter just blindly. You got to understand what time frame you're trading, watch volume. Is it closing below? Is it a fake out? Things like that. What type of pattern do you see developing near that signal? There's a lot that goes into it, okay? But the more you practice, the more you'll learn, right? The best advice I have is patience and discipline. Whether it's a trade signal or you're trading by yourself or you're trading alongside your mentor, just take it easy. Lower your size while you're learning, and patience and discipline, okay? So that's available for everybody. And also our website, guys, stocksnipertrading.com. This weekend, take advantage if you want to join the team. It's 50% off. So we've cut everything in half, right to that point of control, okay? So it's good for you and good for us. And we'd love to have you guys on the team. Lots of education. I can scroll right through. So if you do sign up, there's a lot you can go through. There's psychology and mindset webinars. I'm going to upload the next one today, later this afternoon, and that's going to be on setting realistic expectations in trading and investing. There's a lot of courses, tutorials, quizzes, learning all about whatever you want to learn, Forex, commodities, types of traders. I always say I'm a scalper. What type of trader are you? You got to understand your psychology for the type of trading that you're conducting. Price action is king. That's what we do here. We trade price action. Here's a full candlestick course for you guys. Then you learn, once you learn price action, individual candlesticks, you put it together. You learn a little bit about support and resistance and chart patterns and technical indicators. And then you got some strategy courses alongside your long form 3 to 5 day big boot camps, and then you got your webinars. Okay, so we got you covered for education. If you want to learn, we have you covered over here, and it's learning every single day, also in a live environment with all of our live sessions that Dave and I do throughout the week. Okay, and we also have free blogs for everybody. If you're interested to learn anything, there's tons of blogs on here. The title is there. Here's one about price action, learning about it. Okay, guys. So, and finally, guys, thank you to everyone. We hit 94K subs last night, so we appreciate that. Hit the like button and subscribe to the channel, and we're on our way to 100,000 in the next little bit. Okay, so we are on the charts on gold. This is how it is on the 5 minutes. Did everyone recognize this, where there was a little bit of consolidation right there? That looks to me like a resistance. If you stretched it into the future, did anybody get that double top right there at 430, 420, 425, 430? And if you don't see what I see it come up. There's a top resistance, push back down. There's the pivot point right there. Coming right back up. Look at how it naturally came right back into that red zone. And there's the second leg pushing down. But you see now how it's having a little difficulty, like right there, breaking that neckline. That's where it came down, produced a little low. It's coming back up a little bit. Will it come all the way up halfway? Consolidate here and continue pushing down. But do you guys see how easy visually it is to see? Okay, when price action trades really nice like this, then that makes it a lot easier. When it gets very choppy like this, where it's just black, blue, black, blue, black, blue, this is where it gets difficult, right? But this is where you got to understand sometimes markets just will trade sideways until they eventually decide on the next direction that they're going to move. And it's all due to the accumulation of the buyers and sellers. But we put heavy emphasis on the overall trend. If there is a trend, we want to consider trading with the trend as much as we can. But what I'm going to do is, so if you guys see like that signal that was sent out really quick, I just want to review it with you guys. So it was on gold commodities right here, and it came out at 625, sell below 46.52. So if we look at 625 AM, kind of 6:30, when it came out, where was it? It was like right here. So if I mark 652 on my chart, remember 652. Okay, it's like right around there, okay? And 625. So see that bar, how it closed below? That gave confirmation that it did close below. However, now we're looking for retests, correct? We don't just enter blindly, right? Unless you're doing what we taught with the size of the wicks and things like that. But if you see, okay, that's got a rather small wick. It did close below the signal point. However, look at the next bar. It opened right here, okay, and came down, but did it fill the wick to create a extended low? The answer is no. That's why I zoom in when I'm trading and I'm looking at candlesticks, because I see it came down, did not break that. Now it turned up right back and it's blue, okay? So first thing what I do is the preceding bar, I always like cut it in half. So I can see 46.55. So as it comes up blue, 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 right there to the 46.52, the point to look to sell, there's no wick pushing it down, confirming that entry right there, and it didn't go down. Then it's coming back up blue, blue, blue. When it gets to 50% or the point of control of that bearish candle, I should see a wick right there and extinguishing this bullish volume down. It's not there. It's a big bullish engulfing candle coming back up. So the signal came out, but that's not where you take the entry, okay? Because if you follow it bar by bar, you will see. Then it came up, and then again, it came back down, and there, now at 650, there's a push down for a new lower low, pushing down that wick. There's the confirmation again, volume closing below the 4652, and now when it opened up, you see that there's the cut line, and then it pushed down. Had you sold that candle right there, 4650, pushing down to 37, that's 130 pips. The next one opened black and continued to push down for about 150, and then now it's coming right back up, okay? Because look at the like if we look at the area, like right over here, we're trading at this neckline, like right there where the support was on that M pattern, like right there. So this is where, you know, it broke down, but there's still buyers holding the support back over here. And now it's coming right back up, okay? So you can see it's quick, but this is how signals work, guys. You know, signals are out there, but, you know, for some traders, they follow them, they wait. Some traders trade blindly, and but that's the process of learning if you want to take signals, right? Okay, so hopefully I broke that down and everyone's got a better understanding of what's going on. But for now, let's start on the higher time frame and break things down with a top-down analysis on gold. And we'll get ready. In about 1 hour and 5 minutes, it will be the open of COMEX market. And then normally at 8:30 we do have some news, but in this situation we don't. It's just some low impact Canadian news, okay? And thanks for everyone for joining. Welcome everyone on Zoom. Thanks guys. Justin, good morning. Happy Friday to you and your family, Justin. Hope you have a great weekend this weekend. Chris, welcome. Thank you for joining. Conrad, Sherry, blessings to you and your family as well. Alex, thank you for joining. Welcome, brother. And to all of you guys on YouTube, I appreciate you guys as well. Samir, welcome. Thank you. Thank you for being the first on Instagram and sorry, on YouTube. We appreciate you. Welcome, guys. Justin, thank you for joining on YouTube as well. Caveat Gamer, good morning to you. Jay Giggs, welcome. Thank you guys. Sergio, Josh, welcome. Each day we add knowledge, bro. Amazing. I'm the same way. Each day is a day. Every day you're breathing is another day to learn about yourself and about the markets and be a better person. So I believe in that wholeheartedly. And every day in the financial markets, you're going to learn something about the markets and about yourself. I'm continuing after 20 plus years. I learn something every single day in the markets. That's why I'm very humble with the markets, and I'm a student to the game. Like I don't have ego. I'm not a trader or someone to say I know it all. I know it all. I'm a guru and I'm perfect. I'm not. I make mistakes. I'm a human. But one thing I know is every single day, if I have my mind set, I'm going to learn something new, right? The markets are very fast. They're very volatile. There's so much catalyst that can happen on a daily basis. There's wars that can happen overnight. So you need to learn how to trade situations like this. And every situation is different every single day. Every candlestick is different. So you got to know, you got to have a little bit of a playbook in mind as to how to react to whatever the market is throwing at us, okay? And the best way to do that is studying and just using proper lowering your risk while you're trading. Because if you make one mistake, we're all going to make mistakes when we trade, and if it's higher than normal lot sizing, that loss could be catastrophic. To other traders who are using with the proper risk management or lower risk management, they take a loss and they can handle it properly and look for another setup and look for another trade. And that loss doesn't affect their psychology. It doesn't cause them to revenge trade. It doesn't cause them to lose focus. It doesn't cause that, guys. So that's what we need to learn. That's why 90% plus retail traders fail at trading. It's not difficult to learn candlesticks. It's not difficult to be patient and disciplined. It's just we want to win money every single day and we want to win a lot fast, okay? That's the greed factor. But I'm telling you guys right now, that's not how trading works. Trading works over time. You got to compound. It's like mathematics. 0.5% today, maybe another 0.5% tomorrow, we've got 1%. Let's build off of that 1% and take it to the next day and try and maybe end this week with 2%. That's 2% more than we had the previous week. And someone will say, Ron, that's not a lot. Everyone wants 20% a week, but I'm saying if you do 2% per week, it will start to add up and you're learning. Your capital gets bigger. Those percentages will start to yield bigger returns, okay? And when you give back, you're not losing 20%. You might lose 0.5%. So that's the way how you got to treat trading, okay? So that's my Friday advice for everybody. But now let's get into the charts, okay? So I'm on the daily, okay? So these are now daily candlesticks. These are not those 5-minute candlesticks. So we know that Wednesday was FOMC. We traded that live. We traded gold yesterday. It was continuing to be bearish, okay? But now I look at yesterday's wick. Did it fill that wick down there and continue pushing down? No, it came up with a higher low and it closed right there. So look, the blue candle has already came into approximately 50% of yesterday's candle and already getting rejected. So if we flip bearish, we could be pushing down to fill our wick. However, there's lots of support down here, okay? So we might get it coming back up blue. Today might be a sideways day, or we're going to continue flushing down. So first thing that I do is we got to find some points of interest. First point is I always look at the most obvious points, okay? So the highest point on our chart is right there, okay? This happens to be the all-time high on gold, right? Just below 5,600, those psychological numbers. I can see the date and time exactly when it did hit the all-time high, January 29, right at the end of the month. Okay, now if we follow the push down, that was the most recent low off of the all-time high is right there. Okay, and I place a yellow line for a point of interest, and you see it's right exactly at 4,400 on the dot. Okay, so now we got points of interest and psychological numbers. Now let's take it a little further, okay? So now follow, okay? One piece of advice is if you get a rejection, you follow it because the buyers are pushing up that volume, right? This is a big black candle coming down and then you're following it as it's getting pushed right back up. So that's the closing price. OHLC. Every candle has an open, high, low, and a close. Okay, so where it closes, I make a line, a point of interest. That's where the body of that candle closes. That's why it's so important to understand the real body of a candle, to understand how it opens and closes. The wicks are very important. Obviously, we analyze the wicks, but the body tells you more where the structure is, where the volume is, okay? Now you see where we closed. Look at how the next bar opened. The next day opened bullish ignited and continued to go up because it was following the momentum of this bullish wick coming back up, and then it transitioned into the next day and continued to go up, and it engulfed that bar. However, we have a big black one above us here, and when it came in, they pushed it back down. And look at the retest. It's exactly this yellow line. Look at where our bar closed yesterday. Exactly right at that yellow line, right? So we are at a point of interest. So that's how you can know what a static line is. Over here, it was support. This is like a month of trading, and it's right back down, revisiting, retesting this location. So will it hold as support, or will volume continue to go back below this yellow line, and then this yellow line will turn into resistance, and then we might have momentum to continue filling these wicks and continue watching gold drop, okay? So there's more. So when you just follow the volume, as it came up, it stopped right there. There was the first stop, that wick. Now you got selling pressure pushing it down, and it continued into the next bar that took us here. It came right back up. Look at how the yellow line right there is resistance, right at 5,100, psychological number. Then when you get confirmation of a bar closing above, that's when momentarily that line flips as support and holds and continues to go higher. But you see, when we got up here, we're at a zone. So I mark zones on my chart. Right there, all-time high, down to those bodies. I make it red to illustrate to you guys that red is sellers, it's resistance, it's supply. And you can see when you stretch it into the future, we came right into that red box, and there was the push down. It was very similar to that 5-minute gold trade I had yesterday, where those 5-minute blue candles came right back into that red zone. I saw the rejection. As soon as the candle started engulfing, I went in a sell, and I put my stop loss up here, and I collected 150 pips just on a 5-minute scalp. It's the same thing on a daily. You're seeing the same thing. All candlesticks have the same characteristics, right? And we're continuing to push down. I see a lower high, lower high, lower high, FOMC flush, come back up with a lower high. We had yesterday's flush, and we're coming back up again today, and they're rejecting it back down. So we might push down, okay? Unless the buyers can build at this location. So now, taking it a little further, see this body? It's a significant body. Why? Because it closed below the structure right here. Closed below this, look at the yellow line. The little bit of volume closed below. So that's telling me very technically that the sellers had enough volume to close it below this key critical supporting line right there. And it's right around that psychological number of 4650. So when I see that, a structural candle, first thing I do is I like to cut it in half and figure out the point of control of this bar, okay? I can cut it in half just by guessing where it is. Normally I do that when I'm trading the 1-minute, 5-minute candles where I got to be very fast. But if you guys got time, grab your Fibonacci tool. This is a very easy tool for everyone to learn, okay? You just plot it at the opening balance, okay? Opening balance, and drag it down. It's a bearish candle, and it closed where it closed, right there, okay? Now you see how I have it set up where it tells me exactly where's 0.5, where's the 382, and the 618. So that's my zone, okay? Very easy. And I can see right now, the wick today traded right exactly inside the zone at 50%, okay? So I draw another point of interest line at the 50%. I'm on the daily, so I use a yellow line. I look at the number, if the number correlates with a psychological number. This one, in fact, is 4733. So I like to be around that 4725, okay? So this one doesn't, in fact, have an exact psychological number. That's okay, that's fine. That's how trading works. It's not always going to be a psychological number, but I look and it's exactly 50%. So I understand that that's working. Now, I don't want just 50%. I want a zone. Okay, so you see how I just made my zone? The box. It's just your Fibonacci numbers, the 382 or the 618. And if you have them reversed, don't get stressed out. If the 618 is on the top and the 382 is on the bottom, it's fine. Okay, we're not looking at the numbers. I'm not looking at the 382. I'm just looking at the size of the box, right? Once I figure out my rectangular box, that's it. That's called the golden zone with the Fibonacci tool. These in between these ratios, okay? If you understand that, now what I do is, again, I stretch it into the future because I want to see again today, will it come back in here? I want to see on Monday, starting next week, will it come in here? I want to see Tuesday, Wednesday, Thursday next week, maybe 2 weeks. You can extend it into next Ramadan if you want, to take it till next year if you want. Take it till next Eid, okay? Next year. To all of our Muslim brothers and sisters, take it all the way till next Ramadan if you want, okay? And it's static, okay? I use this word, and some of you guys are unfamiliar with the English language. It's fine, okay? I know static is not a normal word everybody uses, but what static means is the zone will always be a zone, okay? The only thing that is variable, okay? Things that are variable are things that are moving. Another word for static is this zone is fixed, okay? If please guys understand this, because this is where some traders get confused here. This is a fixed zone, okay? The zone does not change, okay? The only thing that moves is this stuff, is this volume, okay? So if the volume is below, it's still a red zone. If the volume comes back up blue and closes above it, the zone is still fixed, but the volume is variable. So the volume comes up here, let's say it closes up there. So first thing when it closes up there, I turn my zone the opposing color. It tells me, okay, someone asked me the other day, Ron, why do you do this? What does it tell you when you change it the opposing color? What it's telling me is, as this big blue bullish candle is breaking through, okay, and closes, that gives other buyers confirmation. Not me and you as retail traders. It's giving institutional buyers the confirmation that the buying volume closed above that red zone, okay? So that's good if we're considering buying. Now, we don't always want to buy the highs, right? Because that's FOMO trading, fear of missing out. So a lot of calculated, patient, disciplined traders, they wait for pullbacks. You guys have heard of breakout, pullback trading. It's very common trading, but this is the analogy of what happens. So when it closes above, then this zone could now be filling with pending buy orders as opposed to pending sell orders. Why? Because the sellers now have maybe canceled their offers, okay, taking them out because they see the volume breaking through here, and then they put offers back higher, okay? They want to sell at a premium area. So they're taking their sell orders out of this zone and they place them higher. They want to sell either 50% of FOMC's candle or at this yellow line. They get a better fill, they're selling at a premium, and then maybe the market will drop and they make money. They don't want to sell right here if they see bullish volume breaking through here. So when that happens, they're canceling their orders. Pending orders are just sitting orders that can be canceled at any time. Okay, so they're canceled. And then this zone is getting filled with pending buy orders with buyers. So whenever, eventually, if it does retrace in here, here's your retest. Picking up these pending buy orders and retesting to see if this is actually a strong buying zone. And if it is, we get a wick, maybe a bullish engulfing candle printing out of there, then maybe has enough orders to continue to break the previous high and drive higher. And that's how me and you can make money, okay? Does that make sense, guys? So I do this on all time frames, right? I'm just breaking it down from the daily. And this zone happens to be where there's sellers right now, okay? Make sense, guys? If you guys understand that, hit a like on YouTube, subscribe to the channel if you just learned about a fixed zone, and guys on Zoom, does that help me breaking that down? I know you guys got this, but I want to break it down properly to everybody, okay? So let's follow the volume now, okay? So it came, today was a big blue candle right into 50%. Let's say it comes back up and it breaks through here. I'm not looking for gold to continue to come up all the way to the all-time high. There's levels in trading, right? The next level is where the next bar closed and the next bar opened. Just put a line there. That's what someone asked me. I read the comments, guys, all day, but I didn't have time to answer it yesterday. Someone on YouTube said, Ron, how do you find a point of interest? Right there. That's a point of interest. Where a candle closes and the next candle opens, that's a POI, point of interest, right? It's not a zone. It's a point of interest on the daily. Why? Someone asked me why. Because that's where the market officially closed the candle, okay? And that's where it opened the candle, okay? So that's a point of interest. And what I do is I measure that. So I know if the buyers break it through there and it's a blue volume, blue volume, blue volume, and it comes to that point of interest, it's a $65 move on gold on the daily. So when we break that down into pips, that's 650 pips just to come from here and impulsively break out or fill to there. That could be a weekly goal for someone, okay? Just to get that fill. And then when it comes up there, I have the respect when it comes up there that it could be sellers there and pushing it right back down for the retest. And if it comes back down for the retest and I don't do anything with my 650 pips, I'm basically giving it right back to the market, right? And there's no guarantee when it comes down here, it's going to hold. It might come through there and continue being bearish. Then it might come after my stop loss. And that would be catastrophic, actually, if that happened, okay? So we can mark areas. I can also mark out the point of control of FOMC, but I don't think we're going to drive all the way up there today. So I got to stay more into this range. If I was doing a full top-down analysis for the rest of the week, yes, I would be doing more and more and more, okay? So we've already got rejected. It's coming down now, okay? So let's follow how we opened where we closed yesterday, okay? So I'm just going to move this to the opening point of interest, right? We closed there yesterday, we opened. Look at the number, 4650, psychological number, right? And we originally opened up and it was bearish. To those sellers who sold early, right, you gotta look at the size of the wick. It didn't have a tiny wick to open bearish, break the wick, and a firecracker drop. It's got a huge exhausted wick from the day before. So those sellers today had to really fill that wick and continue dropping. As soon as it opened bearish came down, that's the lowest point of the day. The buyers stepped in and made a higher low. That's my purple line, 46.33. The buyers stepped right back in, pushed it to the opening price, flipped the candle blue, where we came up. That 50% right there happens to be the highest point of the day. So I just flip it purple, and that's where we got our rejection coming down. We're still holding some bullish volume. So in fact, it could still continue to refuel itself and come back up this wick, or we could come back down to the opening balance and flip today's candle and start pushing down the wick. However, it might not fill all the way down and extend another low. So first thing is, let's identify yesterday's low as a point of interest. If it gets down there, okay, draw a yellow line. Look at the number, right? Look at the number of yesterday's low, exactly 4,500. Sorry, Switz, can I say happy birthday to your dad? Absolutely. Happy birthday to your father, Switz Edits. I hope he has a blessed day today. Happy birthday to your father. How old is he? We got to give a shout out to the dads out there if it's a birthday. I'm a dad too, and happy birthday. Okay, so you see, if it comes back down and fills yesterday's wick, we're right there. It's still a higher low where it could find equal low tweezer bottoms right at 4,500, hold support and come back up. If it breaks, then I know we could be filling this wick on my birthday on February 2nd right here. So happy birthday to your dad, and gold sold on my birthday right over here on February 2nd. So we would be filling my birthday wick coming down here, and if it breaks, right there, you see the structure? There's a body and a body. So I have another yellow line right there, because that's where for 4 days the market accumulated. It came up, back down. It came up, back down, closed right at the yellow line. It came back up. Look at where it closed, right at the yellow line. Then you had 4-day accumulation. Then you had on the next Monday a big bullish starting the new year, January 5th right here, big bullish move coming right through there. Okay, so that was the new year. Okay, so this is where gold is coming all the way back down to the start of this year. Okay, we might retrace all of 2026 gains coming all the way back down to where everything started. We might erase all of the gains this year on gold if it comes right back down to 43.25. Okay, so guys got this? Now I'm going to break it down on the hourly. Okay, so I'm moving off of the daily now. I'm going to do the same analysis on the hourly. Let's move into 1 hour time frame. Okay, so you see there's candlesticks. I have that zone now. I have the purple high and low of the day. I got my daily points of interest below me, but now I'm on the hourly. So let's look. Hourly, we are in a downtrend. The big push down came down, lower low. It came back up, lower high. They pushed it back down, lower low. I can see how low we came down on Thursday, 9 a.m. It's been slowly coming back up, coming back up, coming back up, but we came right into that point of control, and you can see it's a double top in there. How do I know that? Because I follow price action. Here's the first top. It came in Thursday at 11 p.m. There's midnight, 1 a.m., the first drop. Here's the second top right there. This was 4 a.m. Look at exactly equal highs. There's your second top pushed down. That's your bearish pin bar. And there's your next continuation, okay? And the second leg traditionally has more volume. So I can see it broke that support level and dropped. But now we've got it where it's being protected from the lowest point of the day. See the purple line, and see that hourly candle just opened, just briefly broke, but now it's coming up as a bullish engulfing candle, and it's going to close in 23 minutes. So if we get a bullish engulfing hourly candle, maybe we'll cut it in half. Maybe we'll see the size of the wick. Maybe we're going to get a continuation of gold being blue going into the next hour and coming up, unless they can push this hourly candle down and continue to test and break today's low. But you see here, in between the yellow and the purple line, look how the hourly volume yesterday was consolidating in here. It came up, back down, came up, then broke out. We came right back in here. So this is an hourly zone. See how I can trap the volume in between my two lines of point of interest right there. So I see that how is a bull flag right there, continued to break out. And we just came right back into this flag, and now it's coming right back up, okay? So for gold to be bearish, we got to get some black closing volume below here, creating a new low of the day. Maybe then we make that green box red. It comes back in here. Then they reject it back down. And there is the hourly base of support right there. So on hourly, I draw white lines. And then I know if the volume comes down there, it's coming down to a white line. It's an hourly support. There's the support. Look, it came down. The wick brought it right back, closed right there. Next hour, it came back down, came back up, and closed up there. Then when it came back down, look how it held the white line, held the white line, held the white line. I don't see any black hourly volume closing below there. I look at the number, 45.75, psychological number, okay? Now, what I do is continue looking at some structure built on these hourly candles right there. There's a pivot where it came down, it closed, it opened, then it closed below, and now it's resistance. So let's put a white line right here on our charts, right there. 46.69, 46.70. Okay, you see why I placed a white line there? Because when it came down these 3 hours, it closed right there. That's where that big bullish candle at 3 a.m. This is London market, came back up. That took us to the double top the daily high. Then they rejected it back down. And this hourly candle, look, closed with the volume below the white line. Now it's using the white line as resistance. Okay, so we got to get that bullish engulfing hourly candle to close above here, because right now this white line is our resistance. We could be barcoding in here for a little bit where it's black, blue, maybe next hour might be black again, might build in here. It might do something like this where we're in a flag. Okay, but this is good for scalping inside here if we go on the lower time frames. But this is what we got going on the hourly. So when I look at it now, the overall picture on the hourly, we have this huge drop held right there, support. We came right back. Consider this as the one top now. Now we're coming back down. So this is the higher low supporting hourly zone. Will it continue to hold, or will the market come back down to test the bigger hourly double bottom down here, then push up? Or if it pushes here, it might get rejected and then we're dropping back down. But right now, you can see how the depth of market on the hourly is building right here. Guys, stop, Bashar, stop spamming, or else I'm gonna have to delete you. Stop, please. We're not in a buy or sell, just relax, learn. See what I mean, guys? See, just look at Bashar. Sorry, I'm not calling him out, but look at guys, I'm trying to teach people how to trade, and all he's doing is spamming 20 times, should I buy or sell? Should I buy or sell? This is what I mean, guys. This is where people do not want to learn how to do this. And I'm trying to teach you so you can know to buy or sell, okay? So just please stop spamming. There's people that want to learn how to trade, okay? It's annoying. It's annoying for me and it's annoying for other people. It's annoying for you too. You look like an idiot doing this. But don't do this, okay? It's like someone in school just in the back of the class just shouting out when the teacher is trying to teach you something and just screaming like an idiot. Stop. We've talked about donkeys on the call, okay? We don't need them. If you want, go to another channel and do that. Not here. Here's for learning, okay? Focus, okay? We got a big bullish engulfing candle now. It's going to close in 20 minutes now, okay? So this is an impulse hourly candle. Whether you're buying on this hourly bar, you're buying on impulse, okay? I don't know where it's going to close until it officially closes. So what I do is I break it down further. I go into the 5 minutes, okay? Now these are the 5-minute candles, okay? So now we look at the 5-minute. Remember what I told you? That double top on the 5 minutes? It came up, one top. There's the big leg coming all the way down. It had another leg coming up. There's the big M pattern, okay? And look at it coming down, coming down, coming down. It broke that low. It came all the way into there, and now it's coming back up, okay? So have we had a 5-minute bar close above this hourly white resistance? Not yet. I see came up right there and they pushed it down. I see an impulse. I see this candle breaking out right now, and we got 3 more minutes to go. So this is an impulse candle breaking out. However, do we have any supporting levels below us? Like if it pulls back? Obviously, if it pulls back, I'd like to be buying anywhere in this green zone. That's the big supporting demand zone. But I can see it already pulled back into here, went back up, pulled back, went back up, pulled back, went back up, pulled back. So it's creating its higher lows and it's continuing to go. So if it comes somewhere, maybe inside here again, I could be looking for maybe a pullback buy. However, here is better, deeper depth of market. If this candle closes above, I could buy a retest maybe off of this white line. Okay, that's a shallow confirmation retest. And we got to just see how this candle closes. Maybe it comes down there, retest this, buy, and then maybe go up higher, okay? Otherwise, we got to wait for it to come deeper and deeper down in here. And we know if we're still buying, we are still buying against this downtrend, okay? So this buy could come, like trade up into where these bodies are, like let's say right up there, and it could go back down, okay? How do I know that? Because there was some consolidation right here. If I trap that volume right there and I make it neutral, and I just drag it across right into there, okay? That's where most of the volume was black, blue, then it ended up continuing to push down with this downtrend. So if we're coming back up, we might revisit this consolidated zone, okay? And that's where it could do exactly what this arrow is doing. Come up and go back down. Again, we can use that zone to see if volume closes above. If it does close above, that zone could turn again into pending buy orders to take us back up to there, okay? And then once you're all done your physical price action analysis, your top down, you can add your indicators if you like. Common indicators that we all use is a 9 EMA. So I can see now we have volume above the 9 EMA. We can add the 200 EMA. See the 200 EMA is right here, just below that zone. So it could definitely come right into there, break that 200 EMA, get into that zone, and sellers could be there pushing it down. And then the final indicator I use is the SST daily bar indicator. I can put this daily bar on any time frame, daily, 4 hour, hourly. This week we've been keeping it on the 15-minute. It's been working for us, so I'm going to continue to leave it on the 15-minute. It shows us the higher time frame, not by much, but still a 15-minute candle. And we know it's going to close in 45 seconds because it's going to be 7:45, okay? So will we get 15-minute volume closing above that hourly white line? Will it close below it? Let's see here, okay? I'm just gonna zoom in a little bit. We'll do Nasdaq and US30 a little bit later because we'll watch gold for now. And then in about 30 minutes, we got COMEX, okay? Okay, so that was an impulse move. It did fill that wick, create a new high. Now it's getting rejected. Okay, so let's just go through the rules. Did it close above the white line? Yes. Does it have a low wick? No, it's got a rather long wick. Okay, so now it's getting pushed back down. Okay, so if we buy, for example, if we buy, we got to consider, we got to fill up that big wick to go higher, okay? If it was a short wick like these ones, that would have made a decision to possibly buy easier because it could have filled that wick and continue to go, okay? So we got to either wait for a nice healthy pullback. See now how it didn't come up? Now it's a bearish engulfing candle. So I want to see, will it come and take out that low, or will it get another higher low wick and come back up? Okay, maybe I need more blue volume to close above there. We have this new 15-minute candle that just opened and it's bearish right now. Okay, so it caught a higher low. I'm going to check spreads. Also check your spreads before you trade. I can patiently wait to see if more blue volume will close kind of above here and build a little bit of a base there, or you can go in on this candle or wait. Right now it's a bullish pin bar. Okay, it's building. It came down. Remember, it opened black, 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 higher low, coming right back up. Okay, so it's still holding. It is building. Okay, so I'm going to buy it, okay? Because it already retraced down. It already, held here for a couple minutes. So I'm going to buy to fill that wick and drive higher, okay? Maybe to, I could take it to that 200 EMA where there's these bodies right there, okay? That could be a target where I'm looking for. Stop loss placement, I'm going to place it under this red line. Just in case if it pulls back into here, I want to see if it will pick up some pending buy orders inside maybe this flag right here. I'm going to buy on gold, okay? And then I'll continue to watch the volume to see if we can get more volume closing above here, but we need to continue to fill that wick to make a higher high. So it got rejected up to there. That's a lower high coming back down. So we got this spin top candle hanging around right again at this white line, right at that hourly support. Okay. So we've got buyers and sellers in this location here. So it failed to continue to fill that wick and continue go higher. So now the sellers are coming back in. You can see they're stepping in on the higher time frame and pushing it back down. So what I got to rely on is to see if we continue holding higher lows and continue to push up that black volume. Is this going to be a black bearish engulfing candle? Then the next bar could be black. Okay. So sometimes if I get into a trade, if I don't like what I'm getting, I can manually exit the trade sometimes without it coming down to my stop loss, okay? But I play it like candle by candle, right? So I see it came down, still holding higher low and coming right back up. So we got a spin top candle. This is a spin top, 50-50. It came up bullish, came back down bearish. We're right back at the opening balance with 90 seconds to go. So it's one of those candles right now. So far, it's 50-50. Both the buyers and the sellers have equal control. But ultimately, at the close, will dictate who has the ultimate control. Okay, and you see how it's still hovering right around this resistance. Okay, so I follow the candle right into the close, especially the last 30 seconds, the momentum going into the close on all time frames, whether it's a 15-minute candle closing, a 30-minute, a 1 hour. The last 30 seconds tell you a lot where the official close is going to be. It could dictate the momentum going into the next candle. Okay, so number one is we have not created any new higher highs. We still have some higher lows, but we have this big bearish black volume potentially engulfing, okay? So I got to see, will it build in here? Okay, this is where it was barcoding. Whereas blue, black, blue, we've got those wicks in there. So it's coming back inside here again. Okay, so it closed, engulfing, okay? So first thing I do is I cut that black bar in half because if it comes back up blue, 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 It could get rejected and come back down. So I got to get that blue volume once again to transact above 50% of that black candle. Okay, but now you see it's pushing down. I'm in drawdown right now. Okay, so I'm in drawdown. Is it time to panic? Not necessarily. If you over leveraged, maybe, but I'm not over leveraged. I gave it this much room to breathe. Now I want to see how it will transact back into this zone here. This is where we should see the buyers appear, because they were here, but it's pushing down bearish. This 15-minute candle is bearish, so it could cut right through this zone. But we do have some wicks protecting us below here. We got this wick, this wick, this wick, this wick, and this wick. So I'd like to see a higher low wick being formed in here. If it's not here, then this trade could go against me. Okay, so we do have a little bit of a wick inside the box. It is a higher low. Now can we flip our candle back up to the opening position and turn it blue and turn it back up here? Or is that bearish volume going to continue to push down? And when I look back at this, I went in prematurely. I went in, it was a long wick to fill, it came up a little bit, and then the sellers took over. My stop loss is below this red line. I'll verbally let you guys know if I get stopped out. I'm still holding it, okay, right at that red line. I'm just below that red line, like I said. Okay, so it picked up some pending orders down there right at that red line. So let's see if the candle will flip, okay? So you see where I positioned my stop loss? Just below that red line, okay? So it came down there, but it picked up a pending order right below where I am, and there's a good return. However, the black body of the candle is still black. That's that big 15-minute bar behind us. So that could naturally just continue coming down this wick, and then the next bar would stop me out. Unless these buyers can continue to ask and trade above here and build in this consolidated zone, and we're right back in there, and then maybe the next candle can move off of this momentum off of this wick and turn back up blue, okay? So there's a lot of buying support down here. We see a big wick, 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 and a wick. Okay, so like just above 57, 58, there's a lot of buying support on gold down here. Okay, so that's a good return wick. Okay, I just escaped being stopped out just by 20 points. Okay, you can see there. I told you guys my stop loss was below the red line, and I'm still in it. Okay, now it picked up all of those orders. Okay, so now we have about 1 minute and 20 seconds to go into the close. So will the candle close blue on the 5 minutes? And then will we take that momentum into the next bar and continue to close above 50% here and work our way back up to that hourly resistance where I entered early, okay? But if it builds its way up there and closes above, knowing that it got this, I could potentially add maybe another buy order to get through here. But we're not there yet, okay? So I still know that I could still get stopped out of this trade. It could still come back down black and work its way down. We're just in this range right here where the market is just picking up orders. It picked up orders up here where I got in, and then it picked up orders down here, just above my stop loss. Okay, so ultimately, when the candle closes, we got to see what type of bar it is. And you see how it's still holding bearish with that 15-minute bearish bar, that body of that 15-minute. That was a nice 5-minute push coming up, but we're going against this 15-minute bearish candle. Okay, and we're closing right now. Okay, so it closed again right back in this box. Okay, so that's that where it was just going sideways, blue, black, blue, black, blue. It advanced out of there, it came back in black, and now blue again. So it's just barcoding inside here. Okay, but we got to get blue volume to continue to create highs, right? Because I still see a lower high, or below 50%. So sellers could still push this leg back down and then fill this wick. And then unfortunately, I'm going to get stopped out there. Okay, if the buyers are not now putting in pending orders here, here, and here to continue to advance with a higher low and build this up, then I'm risking getting stopped out there. Okay, and that's going to be my final stop. Okay. That's how much room I'm giving it to breathe. If this can't hold or the buyers cannot build here, then if it breaks this, it'll potentially come all the way down here. And I don't want to give it an additional 100 pips of risk. This is my maximum risk in here. Okay, so you still see in this zone where we kind of just trapped this volume, where it's blue, black, blue, black, blue. There was a little bit of a blue breakout, then it came back in, and we're still black, blue in here, okay? So gold is in a range, like it could be selling and buyers, okay? So it's hard to, you gotta be patient. You can't over leverage in this type of area. It's coming back up. Now it's gonna transact right at 50% there. Okay, we got a nice bullish candle, but lots of time on this, 3.5 minutes. What if we flip our 15-minute candle? Then we know the 15-minute came down here, picked up the liquidity, and we close back above that white resistance, the hourly. Then we can build, again, another flag up here. Then we could potentially start to break out bullish, okay? But I don't get excited until I get closing volume because I know a big blue candle can come up, get a wick, and come right back down exhausted. Okay, because we're still battling against sellers here. North, are all of my trades 1-to-1? Yeah, as a scalper, 1-to-1, 1-to-2. You know, sometimes I get in a trade, it goes directly right into profit. Sometimes I get in a trade and it goes into some drawdown. But yeah, as a scalper, I'm not looking for 1-to-5, 1-to-10 rewards. Sometimes I'm just trading one candlestick to the, but if I was more of an intraday trader on a higher time frame or a swing trader, I would definitely be looking for maybe a 1-to-2, 1-to-3, up to a 1-to-5. But I don't always just go with that guideline, like a cookie cutter approach of you have to be a 1-to-3 or 1-to-5 trader. It's just cumulative pips. It doesn't matter. How many pips can you accumulate? That's another thing. Don't always get caught up in the have to be a 1-to-5 trader, because I know a lot of 1-to-5 traders, they get into 3R reward and they don't do anything, and then it comes back and hits their stop loss because they're focused on that 1-to-5 that they're told that they got hit. That's just, you know, you go with how your trading style is. Go with your trading style. Go with the time frame you trade, okay? Okay, so I got a bullish candle coming right back in the money. Okay, but I encountered all that drawdown. They almost got me, but I told you where I positioned my stop loss. Now I got to wait for this bar to close because I still have a lower high, and lower high. But what we need is blue volume closing above that white line because I know that that's hourly resistance. And you see our 15-minute candle turned into a bullish pin bar. Okay, and it's going to close in 1 minute. Then we're going into 8 a.m. So we're going to get a new hourly candle. So if we can get some short-term volume above the hourly resistance, maybe it will pull back, retrace on us, but then we get new hourly buyers because we have confirmation now that we could extend, continue to go up bullish. Okay, maybe our hourly buyers are going to help us out to continue to push this up because now they get confirmation that we're closing above an hourly resistance. However, the market manipulates moves too. So I want you guys to understand that because I've seen markets where they just open black and then they just come down. Then they got to, because there's orders now pending down here. So maybe the market needs these pending orders to continue to take gold higher. Okay, maybe it's accumulated enough because I got a wick, a wick, a wick, a wick, a wick, and a wick. Maybe they got enough orders that now they want to push it through here and collect some orders up here and bypass all these sellers, you know, like stop losses here. Okay, we'll see. I'm going to follow this into the close and see if we continue to move. Following this 15-minute candle as well. Can it turn into a hammer candle? Close near the high. We got some short wicks. Maybe we get a little bit of a retracement, maybe a bullish ignited candle, continue to drive through here. Then we can kind of up our target. Okay, so there's our close. We did officially close above. We got a bullish ignited 15-minute candle. There's our short wicks. We're getting our fill. So we got to continue to fill this wick right here, okay? Right back here. This candle at 5:50 a.m. Eastern, where my dotted line is, 4677. If we can fill that, then we can get up right up to those bodies and the 200 EMA. If it can impulsively break out, then we're trading at the bottom of that zone right there, okay? But you see how the zone held up, guys, okay? Yes, I understand it came down, but that's why you got to learn also stop loss placement in trading, okay? Now, I'm in the money, okay? Bullish ignited candle, that's 80. If it gets up there, 100, 110 pips, okay? So we're right at that. We just broke for that high. We have a beautiful bullish ignited 15-minute candle continuing at 8 a.m. with us. Why? Because we closed above the hourly resistance on the new hour. So we're getting that momentum, guys, okay? So it's up to you when you want to reduce your risk now, okay? Up 80, 90. Let's see if we can get that 100, okay? 100, 110. Okay, this is when you can go to a break even. You can lower your risk, your stop loss. I'm going to go to a break even now. It's worthwhile, 100 pips. Okay. Wow, right there to a target. Okay, so I'm going to close 80% up there. 4681. 80% is out, 110 pips. I'm at a break even for my remaining 20% now. Now I want to see. I'm going to follow the 20%. Hopefully we can drive up to, get it up to the bottom right there, 50% of that big black candle. But this is the resistance, 200 EMA and that body, where that we had that inside bar, that Tetris piece. But look at this. We got the transition, guys. So that liquidity grab, I know some of you guys may be panicked right there. That's what helped get this move. Okay. If you didn't go in, I went in early. I understand. So, but the market had to pull back and collect those orders, you know, and when it came up and closed right there, look, a small wick, bullish ignited body could have bought that candle and continued to go up. Okay. So just reiterating, guys. I verbally tell you guys what I do. So I've closed out 80% of my trade at that line. I'm at a break even for the remaining 20%, but I know that this could come all the way back down to retest this location. However, we got to follow this volume. Okay. So you see our resistance is that red line right now. So that was a trade where I encountered drawdown and I walked you through it. Okay. So sometimes I go into trades. This is live, guys. So I don't hide anything from you guys. I'm fully transparent. Sometimes I take a trade, goes directly right into profit. Sometimes I take a trade, it goes into drawdown. Sometimes I take a trade, I'll get stopped out. But what do you want me to do? Like, I'm walking you through the trade, okay? But you see where I placed it, okay? Someone will say, Ron, you got lucky where you placed it. That's fine. Sometimes you got to have a little luck in trading. But I look at physical structure to know where I'm placing it. I look at what's behind me, okay? What built support previous? I just want to be under there, okay? So we got 90 seconds to go. We still have this bullish ignited 15-minute candle. So that's that strong open right there. And we're continuing to push, okay? My runner is continuing to run. That's fine. Some of you guys maybe didn't scale out, but I did. Because for me, guys, I'm not lying to you, like 100, 110 pips is what I look for, like a daily goal. So I don't close the entire trade. I close the bulk of it. I'm a scalper. Sometimes one candle is all I need. But let's follow it. Let's continue following it, okay? So you see the red line is resistance. Can we get blue volume to close above it and make it support? So it's still holding resistance, okay? We have not retraced back down to the retest area. So when I'm making a zone, right here, that was a red zone. Stretched into the cross, see the red zone. I went in early, but I saw the blue volume close above the hourly. That held, if you guys remember, it did come back down, picked up a wick. Then I went in, but it didn't fill that. So it failed, but then it came down and it picked up the bigger order right there. That's where those bigger buyers were. Once it picked up that last large order, that's what caused this move, okay? So now we're getting that move. So this zone now is a green zone. If it does come back down into here, it could be, you could look for potential buys off of this again. Obviously, it would be better to buy deeper down in here because that's where all of that volume was produced, but we have not retested this yet. Okay, so that's a good bar. It closed above like this wick. Cut it in half real quickly. Just cut it in half. Okay, because if it retraces down, we're still holding the 15-minute body. Okay, if it comes down here, that's that kind of cut in half, the point of control of that previous 5-minute candle, but we got a shallow pullback. We might get that extended continuation, filling the wick and driving. If we drive, we're going to drive to the bottom of here. And maybe we'll transact right into the heart of that box right there. Why? Because this was a red bearish flag over here at 5 a.m. And when I extend it into the future, it's still a red bearish flag. Because remember, we're counter trading against this big selling leg. So we could be coming right into there, and then they could push it down. If you grab your Fibonacci tool from this highest point all the way down there, we'll know exactly like where we're at. So you can grab your Fibonacci tool from that highest wick at the second top of the highest point of the day, bringing it down to that low wick right there. And you can see right there, there's 0.5. There's 0.5382. If I was to draw a major zone, we're trading right in that right now, but there's the 0.5. So this whole retracement coming down and we're coming right back up, we're coming exactly to 50% retracement right at 4686 right there. Okay, so that's just below the red zone. So that's where we gotta, understand that we could come in there and sellers could be positioning themselves to push it back down to retest this box. Okay. Do you guys understand like what I'm telling you? Like what I mean by that? Like we're still, okay, it's nice we're in buys, but you understand that we're still going against this major selling leg. So it could just come in here and it's nice, looks good, could come in there and then push right back down, maybe retest this. And then that could be the bigger, because this area could be pending now. There could be big buy orders waiting now, accumulating to get in. And then that could be the leg that takes it back up there. But if it's got enough volume, we could break right through here. We have a beautiful, we're following this 15-minute strong candle. Okay, we're coming right into it possibly. Okay, so now the trade is moving 150, 160 pips. Okay, if we can come right in the heart of that, it could be exactly 200 pips. I don't know what everyone's daily goal is, but I trade to targets, right? I know I want more, I want more, I want more. We all want more, but we have to respect the way how it was trading here earlier. It was black, impulse blue, black, came back, then that big elevator candle coming down, and that started that huge selling leg down. Now we're coming right back into it, okay? Captain Boom, daily goal done for you. That'll be your Friday. Good job, brother. Good job. Man, you guys are killing it. Yeah, Alex, you went in earlier as well and panicked. Guys, let's not panic, okay? Let's not panic, right? The only time you're panicking in trading is if you're over leveraged, okay? It's just simple facts, okay? If you ever see me panic when I'm in a trade and drawdown, then you guys know that I'm over leveraged, okay? If I over leverage my size and I start panicking when I'm in drawdown, guys, you guys know that Ron is getting finessed by the markets, okay? But I know, I measure my move. If my stop is going to be 100 pips, I calculate in my head before I take the trade. If I was to do that with a standard lot, I'm risking $1,000. If I do it with half lot, I'm risking $500. Quarter lot, I'm risking $250. A 0.1, I'm risking $100. Like, you got to work these things out in your head prior to taking the trade. So everyone has a different risk. My account might be a little bit different than your account, okay? So but that's what you got to learn in trading, right? That's why I don't go to other traders and ask them how much money they have. I don't care how much money they have. I want to know percentages, because percentages are universal. That if I'm trading with a 0.25%, whatever it is, 0.25% across the board, maybe you should be trading with like 0.25%, okay? But we're moving up right into there, okay? So it's going to close in 30 seconds. We have a solid candle. We have that nice bullish ignited candle. We can take a peek at the hourly, right? Because we just opened at 8 a.m. with a new hour. So the hourly candles came down right in that zone. We got the continuation. Remember what I told you. The hourly buyers are helping us right now, okay? Why? Because look at that 5-minute volume closed above the hourly resistance. We're following 7 a.m. bullish engulfing candle, and now it opened ignited with a short wick. Look at the hourly candle. Okay, so we're benefiting on the 8 a.m. momentum continuing, all because of the setup here. Okay, but now we're trading where those bearish hourly candles were coming down right into that zone, right? So they could bring this down. And you got to know that 10 more minutes we're walking into COMEX. Okay, so that's the exchange opening up for gold. Okay, so we got another continuation. It's a short wick. Okay, we can now follow. If you got a trailing stop loss, go up to 50% of that candle. Now we are above the 200 EMA. We got the 9 creeping up. We could have a golden crossover, but when there's a golden crossover, they know that there's orders pending down here, and sometimes the markets get sneaky and they'll come all the way down here, hit all those pending orders, then go back up. That could be like a COMEX move coming up in 10 minutes. Unless they have enough delta positive volume to continue to drive. Now we got a 200 plus pip move that could trade at the top of the zone. Then my final highest wick is right there. That impulse candle right there. Let me just mark it up for us. Holy shit, we got a runner, guys. Okay, 4,700 on the dot right there. That candle at 5:10 a.m. Eastern. Okay, so if it gets up there, that's 300 pips, guys. And it's telling us that's where that big rejection was. And it's right at 4,700, okay? So if we're continuing to follow this into the close, 3.5 minutes, are we gonna close above this red zone? Because then momentarily we can flip it green momentarily. Or are they gonna reject it back down, guys? So either have a trailing stop loss. This is a situation where you can use a trailing stop loss because we have not tagged either 50%. They've been all nice, healthy, shallow pullbacks continuing to make highs. So you could even, have your trailing stop loss 50% of this at 46.90 if you like, whatever, okay? Whenever you guys are happy to take some profit, guys, this should be like a Juma Mubarak, an Eid Mubarak, a trade where you can buy some nice baklava for your family today. I love baklava. Oh my God. And kadaif. Whoo. You guys, I'm going right to the Mediterranean store right after this, and I'm going to buy kilos of baklava. That stuff is like, it's got so much sugar and syrup. Oh man, what is it, Sherry? Oh, baklava? Come on. Let me show you, Sherry. It's like this. It's like a pastry, dessert with like nuts. Oh my goodness, my mom makes this. Look at this. This is to die for, guys. This baklava. Sherry, I gotta send you some. This is, oh, it's so good. It is so good. It's with like pistachios and nuts and walnuts, and oh my goodness. Okay, guys. So you see that big rejection, okay? This is why I don't like getting greedy. I don't like getting greedy, guys. I'm telling you the honest truth. If you guys know me, I'm a very humble trader. I don't like getting greedy because I know we want more. We want more than 250. We want 300. We want 400 pips. But we got to respect our zones, okay? This is my bad, okay? I should have closed out my 20% up there. But I got a runner. That's what runners are for. But guys, understand levels in trading, please. If anything you can take from this session or anything, when you're humble in trading, believe me, you will watch your account grow naturally, okay? The greed destroys us as traders. It destroyed me in my past. I'm telling you the honest truth. I'm like an open book, guys. I tell you guys everything about my past, everything. I want more. Like that trade came up to 250 pips. I'm telling you, this is like, could be a on your way to a weekly goal for most traders, okay? And not respecting this red zone, you see what happens, okay? That they came right through here, and it's all offers pushing this shooting star candle coming down. So this is what I mean. We're walking into COMEX, It's like time in sales. This stuff happens automatically. Like it could come all the way back down and we're going to give up all of our profit. And then the bigger buyers are here and then pull it right back up. So you see that's a nasty shooting star candle coming down. Okay. And now it's attempting right at the 50%. And you see how I gave back some the profit, okay? I've been Power Fula. More than welcome to visit Lebanon. I've been in the past. I've been to when I went to Cyprus. I came to Beirut, and my goodness, this was years ago. This was maybe like 10 years ago. Beirut is beautiful. Oh, I feel sorry for you guys right now, what's going on there, but man, Beirut is beautiful. Okay, so you see the 50%, guys. See, when I cut it in half, it's still holding some support. Remember our bullish ignited 15-minute candle, right? This is a new one, okay? So we're starting a new 15-minute candle at 8:15, and in 5 more minutes, we have COMEX. Okay, so COMEX could be a bearish leg coming all the way right back down, or it could just cool off here, consolidate right under this red zone, and break out and continue to go bullish. Okay, but in situations like this, this is what runners are for. Runners are for, yes, they're to make some money, but also a runner is for education. It teaches me if I made a mistake, how to correct it, right? So if this trade and I didn't take out my profit and it comes all the way back down and hits my my runner, sorry, what happened with my what happened with my buy? Sorry, did I erase this when I... Sorry, guys. I still have that 20% runner. I guess I deleted this when I put that arrow. I trade off my mobile, just to let you guys know. I trade off my mobile. Okay, so we're flagging right now, but we're going to encounter lots of volatility in about 3 minutes for COMEX, okay? So I hope for the sake of us, it can continue to drive through here, but it could come back down. Remember, it hasn't revisited these areas yet, okay? So I would love to continue to move through here, but knowing full well that it could come all the way back down. So if you're looking to buy a retest, your location would be 46.70 all the way back here, because it has not retraced. See that where it turned out blue, 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 and now they're rejecting it down? This is the leg that's going to potentially come down, okay? We'll stick with gold till 8:45, okay? And then we'll move into top down on Nasdaq and US30, and then we'll get ready for Wall Street, okay? See you guys? Like, if you measure how much pips you leave on the table, this is where, you know, it sucks doing this, but sometimes you got to do it. Like, that's 160 pip pullback, okay? But it's got a wick, okay? If this is what I leave runners for, I leave them so I can learn what's going on. If I'm still in the money, okay? And if my runner continues to go, okay, great. But if it comes all the way back down, I don't want to give back my entire profit, right? Because then that will change the way how I take my next trade. It affects your psychology. A lot of traders get upset, get mad, frustrated, revenge trade, get mad. Then they're not following the technicals anymore. They're just buying random candles because they're mad. So you got to stay focused. That's what keeps me focused, is taking some money out, putting it in my pocket, leaving a runner, okay? I don't know, but that helps my psychology. When people ask, like, trading is psychology and mindset, that helps me. Maybe others can set it and forget it and walk away from the computer. I don't do that. I'm a scalper, so I watch each individual candle. So for me, if I get my move, I get it. Remember, I'm a zone-to-zone trader, from one green box to the red box, right? If it continues to go up, we got another red box up there. If it comes down, we got another green box down there, right? So that's how I trade. But we got a good pickup. Okay, so it came down black, 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 right into that, you know, that where our EMAs, if you use EMAs, right in there. It's got a nice bullish candle coming back up. Our 15-minute candle is moving back up. And now we're going into COMEX. So let's see what happens here, okay? If we can break that wick, remember what I'm looking for is, you know, that initial big drop right there. Right there. 4,700 on the dot, that rejection right there, because that's been the resistance. Look, it was support over there. That black candle closed below is resistance and resistance. So if we can retrace above that, hit that, close above here, we could go higher. Now it's COMEX. So it opened black, it's coming down. Let's see if we can get a quick wick, picking it back up, right? But this is a lot of volume coming in the market now. Okay, this is COMEX market. This is the gold exchange opening up. Okay, so we found our barcoding. Look at where we're barcoding, where it was last time. Black, blue, we're in it. We're right back in this flag where it came right through there, blue, got rejected. Yes, it did come back down, but it picked up those orders, came back up blue, and now COMEX is coming back down black. So we're right inside here again. You see the big red zone. This is where you have those potential golden crossover of the 9 coming, meeting that 200 EMA and crossing above. But the market might want to come down to pick up this pending orders, this liquidity down in here, right? I hope it doesn't. I hope it continues producing higher lows, and the delta volume is continuing to make higher lows to continue to push this up. But we're trading in a red zone. So does everyone understand the principles of getting your pips and dipping out of the market? Pip and dip, okay? Otherwise, if you're holding the trade for bigger moves, you're going to have to learn to go through this, okay? And it sucks watching your potential profits go down, go back up, everything. It's hard. But if you're looking for the bigger move, you kind of got to stop looking at your profit loss and just focus on what's going on here, okay? Because if you keep looking at your profit going up, going down, going up, going down, it might affect the way how you trade, right? Do you guys have any questions about the trade? I'm not surprised at this volatility right now. This is COMEX, okay? But we got another good wick right at the 209 EMA location, right at this red line. So remember this red line? That was resistance. We got blue volume above. Can it now turn into support, this 4680 area? That's why sometimes, guys, when you know that you're walking in to a session, whether it's COMEX, it's Wall Street, it's news, and you're in a profitable trade, you got to know that volatility will increase and you're going to maybe give up a lot of your profit, okay? So that's why sometimes if I'm in a trade and I know I'm going into COMEX, I might close out my trade. If I trade Nasdaq or US30 around 9 a.m. and I'm in profit and I'm going right into Wall Street market open, I might start to secure my profit because I know when Wall Street market opens up, it can be chaotic and it can just bypass where I bought in and I give back the market. I give back my profit. So you got to be very calculated with your trading, okay? You got to know when you're entering, what you're going into. Is it high impact news? Look at this. So COMEX is pushing the move down, okay? So can we build some support or is it going to come all the way down to entry? Then my 20% runner is going to get clocked out at break even, okay? And then if that happens, there's a lesson to be learned in there. Why did I not secure in that red zone? There's always lessons. Every trade has a lesson. Every trade you take has a story. Whether it's a winning trade, it's a losing trade, it's a break even, it's an impulse entry, it's a break and retest. it has a story. And if you learn what happened, you journal it, you're going to get better as a trader because you're going to start to understand to expect these type of moves in the future, and you're going to learn from it, right? If you see this more often, this short wick and a bullish ignited candle, you're going to understand what this means, and you're just going to have to practice and improve on it. If you don't know what this means, then it's something for you to learn. This is price action 101 technicals. Okay, so we got a big bearish engulfing candle coming down. So the next bar could technically be bearish and come back down black. That's unfortunately, I got to cut that black bar in half because if it comes up back up blue, it's trading in the point of control of this COMEX candle and can continue to come down. Okay, so if I just lift this red line right up to there, and you see how naturally it's right where that 5-minute body closed, where that blue one opened, halfway point is right there. So if it comes all the way back up, it could come right into there and go back down. If we get that blue volume, just like down here, we got to get that blue volume coming back up and closing above these bars. We got to get that blue volume coming back and closing above here to build off of here to break out of this bearish flag, bearish resistance zone. Did anybody secure profit up there, or are you letting it run and it's coming back down? Lady Stone, you secured? Good. Good. It's Friday, guys. Why not secure some profit? It's Friday, right? I love taking some trades on a Friday, getting into profit. It makes my weekend that much better. Puts you in a good mood. But, you know, leaving your entire trade go up 200, 250, 300 pips, and you don't do anything, and it retraces all the way right back down. I'm sorry, guys, but that's demoralizing for me. And it affects me as a trader. It really does. Like I think about that all day. You guys shorted the top? Excellent. Okay. That's where you short, a red zone, right? Guys, thank you. We have over 500 viewers this morning. Thank you guys so much. Can you hit the likes on YouTube? Subscribe to the channel. We'll do this again Monday morning, probably same time, 7 a.m. And we'll come in for a early morning Monday session. We'll review everything that happened over the weekend. And now we're going into 8:30. Okay, so we've bypassed the first 10 minutes of COMEX market open, and now we're going into 8:30. 8:30 is a new 30-minute candle. You can look at your 30-minute candles. So you see how it came all the way down in that green zone. We moved our way back up, but we're right in there, that 30-minute, and big sellers are still there. So where will this, now we have an inverted hammer on our 30-minute candle. Will it close with some bullish volume? Will it continue to be bullish? We've got a big wick to fill, or will it come back black and retest this? And if it breaks, guys, this obviously you can put like a line in here. That would be a great area to look for buys today. Right here, you're buying the second bottom of that 30-minute or hourly in the green box, right by the lowest point of day, 46.40. Okay. Also here would be, we have not retested our original buy right here at 46, anywhere from 46.67 to 46.70, I would say in here. Could be another potential buy opportunity to buy the pullback. That's coming in right now, this zone, but the bigger one is down there, right? Can I please explain how we mark the zones? With a top-down analysis, that's how we did it. I'm going to do Nasdaq and US30 in a moment, and you can learn how to do it on those. But yeah, guys, all of these zones, lines came from a top-down analysis. These ones right here just came from like looking at these 5-minute bars, what they were doing. These ones right here, you can clearly see those ones. But the overall, where did I get this purple line, this yellow line, this white line, all of this purple line, like all of these lines above, they all came from the top-down we did at the start of the call. Okay, but I'm going to do Nasdaq and US30 top-down so you can learn with those ones as well. We have one more minute to go, and then we're going into a bigger time frame, 8:30. We don't have any news. Normally we have news at this time in the US. We just have some low impact Canadian news. I don't think that's going to highly affect gold. So maybe we make our way back up. But we have one top in there. So guys, if you're looking to short, it came in, we're pushing down. If it creates some support right here and it comes back up blue, we as buyers are looking to continue to break out and go higher, but it could just come naturally in there again, be a double top, and then start pushing down to either retest this and go back up, or retest that, close below and retest this, and more selling pressure, and then come deeper down in there. And that would be the ideal bigger buy, right? Newt, do I ever use the dollar for reference? As correlations, yeah, I do, but sometimes it throws everything off. Newt, so Newt, check it, the DXY. So check it from 7:55 going into 8 o'clock. Was it bearish? Because gold was bullish. You know, that's how we normally look at the correlations. But I used to go with that, where if DXY is going bullish, gold should be going down. If DXY is selling, gold should be going up. Then I started to see sometimes it wasn't correlated, and then it was throwing my analysis off. So, you know, I started to not rely on it as much. I tell you guys, like, I do my own analysis. Sometimes I don't even use indicators. Sometimes I don't even throw EMAs. All I sometimes do is my own top-down analysis, my own zones, and the SST daily indicator just for higher time frames. Okay, guys, so just heads up, if it comes all the way back down to my entry, my 20% is stopped out at break even. So then I look back at this trade and I'm happy I secured 80%, the bulk of the trade. But I'm very upset at myself that I didn't take the entire load at this red zone. That's greed, okay? That's getting greedy. That's trying to break above a well-defined red zone, okay? In a downtrend, number one. Remember what I told you guys? Remember when I took the Fibonacci from this high to that low, and it was trading right into the 50% of that entire move? That's the psychology right there. Why did I not take out my 20%? Now, you know, I got to go back. I'm going to write this trade in my journal. I'm going to put the date today, that today's date was March 20th, Friday. And I got into a gold trade at this time. What made me take the trade was coming from the lowest point of the day, coming back up, write down why I took the buy, and then put my emotions through the trade, what happened. And my fault in this trade was not securing the entire load at that red zone where I'm counter trading in a downtrend. While I measured the highest point to the lowest point, like your Fibonacci tool, that highest point to the lowest point, and there it is. You see, we came right in past the 0.5 right into that 382. So we were right into that golden pocket of this entire leg coming down and didn't secure. And this is the market now teaching me a lesson, coming back down to trigger my break even and say, Ron, now it's time. You got to learn a lesson. Control your greed. That was a 200 plus pip move. You didn't do anything. And you see what goes up can come down just as fast. Okay. So maybe we could potentially look to continue to buy. Okay. So let me just get rid of this. I'll verbally let you guys know as soon as I get stopped out here at break even. Okay, and we could be retesting. Remember, because when we closed above, it was ignited and we continue driving. So this is the first retest of this location. Okay, I got stopped out of the runner now. Okay, so that trade is closed. Now we got to focus on to see, here's our retest. Okay, and you see, guys, if you don't do anything, the market unfortunately comes back down. Now it's retesting this zone right now. Okay, so it's closing in 60 seconds. Okay, so let's see if we can get some buyers, right? We got to see a wick pushing back up. This black candle could maybe come through here and close below and push down even further. Okay, we got a good wick. So it's holding so far, but it's still a big bearish candle. So let's see. Tidy up the chart, clean up a little bit. Okay, so we got, now we see the range. We got one leg up, one leg down. Will we start to move that other leg back up? Or is it just going to come up like to here and continue to break this and drop further down? Okay, so it's still got that bearish volume pushing down. 30 seconds to go into the close. Let's watch the close. Remember, this was the red zone, red zone, red zone. That's where we had the buy. Now it's turned into a green zone because the volume is above. Now we're still holding this. Okay. 10 seconds to go in the close. So we're getting our support right at that zone. 46.70, still holding. Okay. So I still have that red line, cut line. Okay, so we closed, still black, opened, ignited. Now if it comes down and produces a higher low wick, we'll see if we can build here. Can we consolidate just above the green zone and this red line, just right there? Can it just do a little bit of consolidation to continue to pick up some orders here and cool off to curl back up? Or is it naturally just going to continue to break down? Okay, so right now we're still inside here. Okay, so you see it's still a big black candle coming down. Maybe once come deeper down into here, it could create a new lower low or hold here. Okay, so it's holding. So we see some equal lows. Okay, but it's still the black candle. I still have the 15-minute bearish candle. Okay. Thank you for following, Ken Hen from Thailand. Appreciate you. Thailand is beautiful. Thank you for joining. Okay, so wick. Still holding in here, still in this consolidated flag. And if it flips blue and we hit the buy button, we're just buying on confirmations that it's holding here, but it hasn't closed above here. So it's still like we're trading on impulse. We're just using the technicals that it's holding support here, okay? Otherwise, we got to wait for maybe a blue candle to maybe close above here. Because if we buy early, like how I bought early, I got that drawdown, right? So if I buy early again, it might come back down, draw down, then go back up. So maybe I just wait it out unless I see something building here. You still see how it's still holding the zone. Okay, so it's just trading inside here. We have the volume below the 9 EMA and the 200 now. Okay, so it's still holding wick and a wick right there. Okay, so it's still, now it's flipping. Okay, 2.5 minutes to go into the close, right? So we've bypassed half of the candle. Okay, half of the candles bypass. But now we got to go through the second half. It's like the NCAA March Madness games. There's two halves, one 20-minute half and a second. Did you guys see Duke? Oh, they almost lost to Siena. That would have been the biggest upset of the tournament. They were down 13 going into the second half. And then they shut them down where they didn't let them score for 7 minutes and then they beat them. But wow, that would have ruined everyone's brackets. That would have been the biggest upset ever. A 16 ranked team beating the number 1 ranked team. Okay, so you see we're still holding. It's a bullish candle, getting right to that 50%. Like we can buy now or it might push us back down, like what happened to me earlier, okay? So now you got to kind of feel out that volume, okay? Picked up those, or do you wait 90 more seconds to get the official close, okay? But you see how it's holding. So that leg came all the way down to the green zone. A wick and a wick is still holding. Okay, it came up, but now pushing back down. I'm waiting for this to close because my first one was a little bit too early entry. Then I encountered that drawdown. Then it went to profit. So see how I learned my lesson from the first one, and now I'm not committing it again. Okay, that's how you can learn on the fly. You learn live, right? if you're trading live and you're doing this, you got to learn from my earlier mistake. Now you see, if I bought that, it was an exciting blue candle. It held those two bottoms, but it came up and now they're pushing it back down. So this candle could close below here. Then that green zone turns red momentarily and we might even push further down unless they can do something near the close. But you see, if I got excited and I bought that, I would be in drawdown right now, right? So learn your lesson from a previous trade. That's how trading works, guys. You're going to constantly have lessons every single day. You're not going to be a perfect trader. It's very difficult to be a perfect trader, especially on low time frames. It's very difficult. I'm being honest. I scalp 5 minutes and 1 minute candles for all my life. And I'm telling you, it's very difficult to do this. So you got to use patience. If you're going to go on impulse, you got to know why you're going on impulse, right? Okay, so this candle now is coming back down where? Into that zone again. So close below. The big green zone is now red, okay? It officially is red. We're back below. If we look at the hourly, like the hourly volume now is back below here, okay? So it might push down into 50% of this and come back up. But I'm watching it on these fives. So it's holding. So what I need to see is if the buyers can come back up, close it back in here, make that back to a green zone, bounce off of that, and then maybe go up. We got where it could consolidate up there. It's not there. So now it's continuing to push down, right? So it could retest this and push all the way down. Better buying opportunity, what I said, would be down here. Okay, this was just the pullback from this move. Better buying area is here, where you see where it came down earlier today at 7 a.m. and then started that leg up. This is protected by the lowest point of the day. So if it comes down in here, that could be the stronger double bottom at the lowest point of the day, right? But if it's really bearish, it might just bypass that and we break. And today gold is selling, okay? Okay, so no buy. You see how I was looking for a buy there? Guys, easy on the spamming, please. Sorry, I gotta delete this comment. It just says, can we buy, can we buy, can we sell? But you guys understand, okay? I want to make this clear. I was looking for a buy here, but those two wicks, but as soon as that candle came up blue, we could all hit, but we would have got sucked in. So I said, let's wait for it to close, and then it closed below here, okay? So now it's coming back up. Let's see, it's building at this zone here. There's a good, strong zone here. Okay, we're getting some, Fed Waller is speaking right now. His remarks are over here on the side. Don't worry, no one is spamming. I deleted it. Just relax, guys. Focus on the price action. I will moderate the chat. There's no setup yet, okay? There's no setup yet. We are watching to see where this bar is going to close. Relax, guys. Take it easy. Take it easy. You guys got to stay focused. Focus, focus. That's what trading is. You got to be focused. Smoke some weed if you have to. Stay focused, ladies and gentlemen. We're going to get a new 15-minute candle also in less than 2 minutes, okay? So why don't we let this full 15-minute candle close? What are you guys looking at? What are you guys looking to continue to sell? Or are you looking for buys or sidelines? What is everyone doing right now? Everyone has a different bias. Lady Stone, you're selling. Are you in a sell or looking to sell? Sidelines, Sherry. Looking to buy, Alex. Okay. In a sell, Lady Stone. Yep. Got you guys, okay? The SST daily bar, you won't find it. It's given to if you sign up with us, then it's for the members, okay? We created it for the members. If you guys want to sign up with us, you're welcome to join the team. You get a lot of live sessions with myself and Dave, the trade signals, trade ideas, all of the education, SST daily bar indicators, and you get to trade with everyone in Discord. Let me just put the Discord community to see what everyone's doing in commodities chat. Borix cleaning up as usual over here. Okay. Okay, good job, guys. If you guys want to share your charts now, I got it on the left side. I got if you guys want to share what's going on in the Discord, I got it on the commodities channel. Okay, guys. So now we're close. We got a bullish candle coming right back up. Let's see where it will close. Okay. Will it close back above that zone? Here's the close. Get ready. Okay. Here's the close. Right back above, okay, right there. And no wick. So if it builds, it could go right into a buy. Right now it's bearish ignited, so get ready. I might be looking to buy a continuation out of here, okay? I see it's just bearish. There's no wick, so I know if I get in a buy, it could potentially fill up to there, but it's still holding that bearish ignited head. Can you guys see that? Still holding that bearish ignited head, so I just need a nice little push up. It's still bearish ignited. It's still holding that white line. That white line was my hourly point of interest. But now I see it's black still coming down. This could be a black move coming through here, but it's still holding good support at this neutral zone right below us. Okay, so it's still, I respect that selling top. It is bearish ignited on this new 15-minute candle. However, what I'm looking for is a quick wick to pick up some orders and look to continue to go through here on a blue candle buy side. It's not there yet, so it's still a big bearish ignited candle coming down. Now it picked up a wick. Okay, will it flip now? No, it's still holding. So will it continue to accumulate in here? It's a really tight zone. There's a good flip. There it is. Okay, so it turned blue. I'm in a buy now. Okay, I waited for it to pick up all those orders. It's got no wick on the previous candle, so I'm looking to fill back up to that next wick up there. Okay, I'm in a buy. It's in profit right away. Okay, that's 40 pips. If it can fill that wick, it's again 70 pips up to there. Okay, my stop loss is just below that wick. I could go right now to a break even if I like. Right now, grab my 30, 40, 50 pips in and out if I like. However, if I'm giving it room to breathe, my stop loss is still below that zone. There's a good push. So notice how I bought that candle. I waited for it. It was black ignited, came down, picked up wicks. No, it's got no wick. It's a pop. It's a pop and fill. Okay. So I'm going to a break even right now. Okay. Just a quick little, because I know it's one candle that's breaking out of here that could come right back down. So I don't want to go back into drawdown. So worst case scenario is I'm at a break even. Okay. I just put my trade to break even. I should, technically, I should be more of a scalper on these calls, okay? Pip and dip, but I didn't. I'm holding it at break even, okay? But that's a lesson to learn, guys, on how, if you want to execute scalps and get in and out on an individual candle, okay? I'm still holding this, still building, still holding it. I'm not tapped out at break even yet, okay? Still holding it. Can the candle continue to build this 15-minute bar? I'm still in it. I will verbally let you guys know as soon as I get tapped out. It's too fast. I understand. It's fast. You got to have a fast broker, Joshua. Oh, someone said, okay, I'm out at break even right there. So I left 40, 50 pips on the table, but I'll get in on the next candle, okay? So no win, no loss. That was just a fast execution. Someone asked me yesterday, is trading with Fusion Markets I use? They have two accounts. Make sure, because when I say I have a 0.5 spread, someone said they have a 5 pip spread. There's raw and ECN. So I'm using a raw account. Make sure you guys are selecting the correct account. I use raw. Most brokers have a raw. Those are your lowest spreads. You can use a combined one. It's where it factors in spreads and commissions, and that one might have higher spreads. I don't use that one. I use raw with the lowest spreads and then you pay commissions for certain securities that you trade, okay? So just to reiterate that, I'll just tell you real quick. I know it's fast. That's why I don't like scalping 1 minute candles, because it's too fast for you guys. See how that one closed right at the above with no wick, and it opened and it was bearish ignited, and it came down, it got a wick, it was still black, it came down, it got a wick, it came back down a third time and got a wick. And then as soon as it flipped blue, I went in a buy, and it came up all the way up to here, okay? I was targeting to see if it would fill that wick, right? And when I measured it would have been 70 pips. However, it went into profit, 50 pips. I did not do anything. The only thing I did was take my stop loss to break even, right? And then I was looking for the move to continue to fill that wick. It's not there because I'm in a downtrend. I'm counter scalping a downtrend. So I respect that. I should have pipped and dipped. I didn't. But you see how I controlled my risk. As I put my stop loss to break even, it tapped me out at break even, all good. Learning process. We're learning here, guys. I'm teaching you guys too. Now it closed back above. So now the blue candle did close above the red zone. Let's just continue doing what we do here. You're still in the buy? Yeah, some of you guys may be held, okay? But I'm here to teach as well, okay? But if you guys held it, perfect. Now we got the closing volume above. And remember where my original stop loss was? Just below that wick, okay? Had I stayed in, I will still be in this trade. But regardless, I'm not, okay? Let me walk you through it now. So we got the blue volume closing back above the zone, so it's still a green zone. So we are still building now. Now we got the support now. Now it could technically fill that wick and drive back up to there, okay? And that was that candle I entered in. It closed as a bullish spin top, okay? So it's still a little bit indecision, but now when it came down there, it picked up those orders and continued to move up. Okay, so now the target is to see if it can continue to fill the wicks and continue driving with the uptrend. So we do have kind of the double bottom being produced right here, or the first pullback. When we drove on the first buy, came back in, it went a little deeper, but still got up and could be coming up. Now we got to continue doing, fill the wicks, pop, and see what we do up here. Okay, it might just come up to like a wick, and the 200 EMA right there, and it could come back down. But then we want to use the red line for support to take us back up to there, and maybe we'll drive further. But love the 1 minute candles, Lady Stone. I love them too, okay? I have a love for them. Like, believe me, guys, but it's too fast. There's a 20-second delay on YouTube, and you have to have a fast broker, but I'm a 1 minute. Look at the one, like right there, the Tetris piece. Like I can't tell you guys, like the inside bar there it was. Like, look, it closed right there, it came down, came back up. That's an easy scalp. That's what I took on that, but it came right back up and came right back down. Now it's building itself right back up. If you get 1 minute volume closed above the red line, ignited, short wick, should pop, and at least the 1 minute candle should fill up to this resistance point right there. Like right there, it should ignite it, continue to fill, backfill that wick and get up to that red line. Sometimes when I'm scalping, I'm just measuring from this red line to that red line. And again, it's 50 pips. That's why I told you guys, I'm a 50 pip trader. Like that trade, I should have open closed 50 pips. I didn't. I'm trying to teach, okay? But it's not easy. Everyone wants to learn scalping. It's not easy to teach, right? Now it's a bullish ignited short wick, same principles, coming up there, right up to there. There was a rejection, and a rejection. So if it comes back in there, it could get rejected one more time. However, if we break that, we are creating a new high and we're extending this rally up, right? This candle is closing in 10 seconds. Let's watch the close of this 1 minute. Our 15-minute candle has turned bullish right in that nice green pocket. That's why I personally trade 1 minute candles like by myself. I used to teach them live on here, but spreads now are too crazy for unless you want to learn. Like if you want to learn, I can break them down, no problem. But if you want to follow the way how I trade, you have to have a fast broker that executes. Like that buy and sell where I went in and it went up 50 pips. I didn't take out because I know if I said I stop, some of you guys won't have it. So that's why I thought going to a break even is the best thing to do. Okay, I consider you guys when I'm trading. Believe it, guys. Believe it. I know some of you guys trade over leveraged and it affects the way how I trade, but I always am thinking about you guys when I'm trading with. I trade different when it's just me in front of the computer. I know what I'm looking for, but when there's an audience, I respect you guys. I don't want to do anything quick, but Sometimes I leave money on the table. But it's all right. It's all good. There's a lot of 1 minute candles throughout the day that we can get. Okay. But you see, guys, okay, now looking back, review. Does anyone ever review anything after you get in a trade, don't take a trade, what's happening at your zones? Do you see how this, look how easy it was to trap this. I can go get my daughter. She's 9 years old, soon to be 10. And I tell her, put a box around those black and blue candles. She can do that. I tell her to advance it into the future. And then she'll say to me, oh my God, that blue candle and black candle still was in there. And then I say, continue doing it into the future. And you see how it came in there and came in there again and went back up. So let's advance that into the future again. If it ever comes back down in there, we might get the same thing. However, if it closes below and we get a black candle, we make that red and then we're dropping down to there. Then it's an easy sell back down to there, okay? But right now, this is being protected and it's coming right back up. So it broke through here. Here's the close, 5 minute close. Is it closing above or below that red line? So it just closed below it, right? So it could in fact come back down. If it does, just cut that bar in half. Real simple, okay? And if it comes down, we'll see if it can hold 50%, right? 50% of this candle. If it doesn't, we know it's strong and filling, but it's got that big wick to fill. And if it can't fill that, it might get rejected and come back down and retest this, okay? That's the first line of defense, is this point of control, okay? It's not a structural candle. That's why, I put more emphasis on structural candles. Those are candles, like if I get a blue candle that closes and engulfs all of these like black candles, that's a different story because I know I have an engulfing candle. But this one just came up and closed with majority of volume, so I just cut it in half and continue. If I was in a buy, you can have a trailing stop loss just below there. If it continues to build, we're filling that wick and potentially breaking out. It's tried 3 times. That right there, and could not break above that 200 EMA and this 46.82, okay? Might have to come back down, pick up more higher low pending orders to continue to break through here because there's probably a lot of offers up here, but you see how it's slowly building. Okay, guys, it's almost 9 a.m. At 9 a.m., unfortunately, I'm going to have to move off of gold. We're going to do a top down on US30 and Nasdaq. I'm going to put them both on a split chart like this for us, and then we're going to follow those into Wall Street, and we'll take a peek at what gold is doing as well. Samuel, you honestly review every trade for your psychological reasons. That is perfect. You're very rare, Samuel. There's not a lot of traders that do this. I'm being honest. I'm like you. I was at the point where I was reviewing every single trade I took, and I take a shit ton of trades. I'm a scalper, but I learned so much about my entries, my exits. I learned where to place stop losses. I learned where I was fearful in trading. I learned how I was greedy in trading. I learned how I was impulsive in trading. I learned how to get better at managing my risk. I learned how to become more patient and disciplined. It spoke volumes when I actually critiqued myself, okay? Because a lot of times we just take a buy, we take a sell, we win, we lose, and we forget about it. And we look for another trade. We take a buy, we take a sell, we win, we lose, and we forget about it. And we just go on with our day. And we do not review anything. So how do you think you're going to improve as a trader the next day? You're probably not, because you're going to commit the same mistakes over and over because you haven't learned anything about them. You haven't learned about yourself as a trader. So when we say literally every weekend, take 1 or 2 hours out of your day and review this week's trades, if you only take 3 to 5 quality setups a day, right? It's not a lot. Like I have rules, right? If I spend 1 hour in trading each day, I allocate 15 minutes of review. If today's a 3-hour session, I will allocate 45 minutes of my day to review of my daily trades. Some people do it on weekends. Maybe they trade Monday to Friday, write things down at the end of the day on their journal, and go on Saturday morning, Sunday morning, and just review what you did for 2 hours, okay? Instead of watching Netflix, take the time to review. Netflix does not pay my bills. I actually pay $30 a month to watch Netflix. I can cancel it. I don't need it, right? It doesn't teach me anything. It's not helping me pay my bills. Trading pays my bills. I would rather not watch Netflix for 2 hours and focus on my trading for 2 hours because I know it can benefit me in the long run. Netflix is nice. It's nice to sit back, relax, have a glass of wine, and watch a comedy. That's fine. But I do that after I've done my trading as a job. It's a job. Your review is part of your job at work, okay? When you go to work every day, your boss expects you to do your work, right? You are your own boss as a trader. You're your own manager. You have to set rules as a boss, right? You can make your own times. You can go to the washroom when you want. You don't have to listen to your coworkers, but you have to treat it like it's a business. This is not a casino, okay? So we're moving into 9 a.m. now, 20 seconds to go. So if you were in sells, okay, this is for the sellers. You have to respect this green zone, okay? As you know, when I asked, is anyone selling or buying? Some of you guys said I'm selling or looking to sell or continue selling. I respect zones, okay? I don't know about you guys, but I respect the color. Even if this blue leg comes all the way to this red zone, I still respect that red zone. If I was in this trade, I would be looking to close because I know it could come down, okay? Or close a partial of my trade, okay? But you still see how it's struggling right here. Lower high, lower high, lower high, right there. So now the sellers are lowering their offers right here at 46.80 and could potentially push this thing down. Or we consolidate sideways, one more push up, or it's going to come back down here, okay? So I'm going to move off of gold, guys, okay? I apologize, but I'm going to move off of it for now. We'll revisit this in about 15 minutes because I'm just going to do some analysis on Nasdaq, or do you want one of them or both of them? You guys let me know. While I'm pulling up the trading view chart, you guys let me know. Let me know what you guys want here. Both? Okay, no worries. I'll start off with US30 first. Okay, if you guys don't mind, I'm just gonna pull it up here. Okay, we'll do US30 and we'll do Nasdaq over here. You're going to see it like a split chart like this, okay? So each one I'm going to do an individual top-down analysis, okay? So if you're here to learn, this is how we're learning. Someone asked me, Ron, how did you figure out those yellow lines, purple lines, boxes? This is how we're going to figure it out, how to do it with indices, okay? So first thing I'm going to do is get rid of indicators. I'm not going to add it now. Take those off, take the daily bar. We're going to focus on the candlesticks, okay? You see that there's black ones coming down, blue ones going up. I'm on the 5 minutes right now. I'm going to start off on the higher time frame, daily, okay? Okay, so this is Dow Jones, US30 right now, okay? We see it's in a daily downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. FOMC, continue pushing down, okay? First thing I do is obvious levels, okay? Up there was the all-time high, orange, all-time high, above 50,000. There's a zone. How do I figure a zone? All-time high point of interest to those bodies. Below here is a red zone. This is how. There. Someone said, Ron, how do you figure out a red zone? There's a red zone. Okay. So now that I figure that out, I got to figure out the opposite, a green zone. Where's a green zone? I like to look at like this most recent pullback right there. Why? Because I got a body closed, body open, wick, and a wick. So it looks like a nice point of interest, point of reference right there. I look at the number, psychological number, 45,500. Okay. Now what I look at is just above the wick, this last pullback right there. So it came down higher low and built up. So there's got to be a box like from there, from the yellow line to there. Okay. Make it green. Now stretch into the future. Now I can see how we're trading yesterday and today in the green zone. It's finding buyers, but it's not flipping blue like a 5-minute candle, like what we're doing on scalping. So this is where I can relay scalping to daily traders or swing traders. It's the same thing. If I didn't tell you that these were daily candles and I told you these were 5-minute candles, if we're buying right now, we could be buying and then it could continue pushing us in down and drawdown, okay? So it's the same principles, same concepts, okay? Now we've got some zones. Is there anything else that we can look at? You could just look at where there was like some touches. Right here is a good point of interest. Why? Because it pivoted right up there, stopped, came back down. There's where it closed above. Now I can see a wick at the yellow line, wick at the yellow line. When black candle volume closed below, the wick is at the yellow line, yellow line. Again, blue volume above, the yellow line turns to support, support, support. Now you see how that yellow line cuts that black candle in half, and now it's resistance, okay? So we're not there yet. Is there another area that if we come up right there, look at it, okay? It was support over here in the past. It was still holding support, big impulse break, but the volume closed above. There it closed. Now we close below it. Now look at when it came up blue, right to the yellow line and continued to push down. So this is a resistance. This is a resistance. And one more yellow line in here. Guess what it's going to be? It's this structural bar. Please pay attention. If someone pays me 10 cents for every time they ask me, what is a structural candle? I would have been retired years ago. Listen. This is a structural candle. Pay attention, guys, because I'm losing my voice. Excuse me. Look at this candle. This is a bearish engulfing candle. It engulfed this blue candle and this blue candle. It basically, play the game Pac-Man. It swallowed these like pellets. It swallowed those blue pellets, okay? That's a very important structural candle. It closed, engulfed, and trapped those blue buyers, okay? And I know that this is a specific candle. This was Wednesday's FOMC. Look at the volume, okay? So this is a candle we have to cut in half and find the point of control. How do we do that? Fib tool, opening balance, closing balance. 50% is right there, cut in half. And now we figure out our zone. It's right there, easy peasy. Make it red to illustrate that it's still sellers. So if we come back up here, blue, that's where it could get rejected and pushed down. If it closes blue above this point of control turns green. We might be building pending orders to take us back up to here. Just as if we are scalping, okay? But the thing is, when I'm scalping for 50 or 100 pips to fill a zone, okay? This is on a daily. Okay, so this is actually $80. This is 800 pip zone. Okay, that's what I mean. Daily traders are looking for more pips. Scalpers are just looking same zones, but they're smaller increments. It could be 80 pips, right? I showed you a trade I just took for 55 pips and it went right into profit, but I didn't do anything. It filled up a little bit, but came back down. You could have a daily candle that comes up, fills, like it could fill right up to those bodies. If you're in a buy, it could like retest this, fill right up to those bodies. You're up almost 400 pips. It could come in there and in that day, in that 24-hour cycle, get rejected and come back down, right? And then you just gave back 400 pips to the market. That's up to you if you want to do that. I don't like leaving money on the table. I'm sorry. It's like putting food on the table. I like to eat. I've gained 20 pounds in Europe, guys. Oh, that food is delicious in Europe, by the way. Talking about food. We can talk about food now. It's Eid Mubarak. Okay. Man, if you guys see me, I got to get back into the gym. I got to lose some weight. Okay. So you see, I've identified this. Now, let's look. Yesterday came up blue, came back down, closed virtually where we are. Point of interest right there. We've got 3 candles that closed, closed here, and opened here today. Okay. So 46,070 is a point of interest. Now, let's follow today's volume. We opened. It was initially bullish. Did the buyers do their job? Yes or no? I'm not going to tell you what their job is. I'm asking you. Guys in Zoom, did the buyers do their job today? Let's see who's paying attention. Very easy. Yes or no? No, they didn't, Justin. The buyers, they did their job at open. It was blue, but they did not continue to do their job to fill that wick. So the answer is no, guys. There's no secrets here. No, they failed, okay? And then the sellers came in. They offered right there. They lower high. They pushed the volume right back down to the opening price. They flipped the bearish candle. And then the bearish candle, did the sellers do their job today? Yes or no? The sellers came down. Did they break yesterday's wick? Yes, they did. Yes, look, it's a new lower low in the market, okay? But it came in the green zone and buyers are there bringing it right back up to here, okay? But we still have to respect this black volume. If we buy, we still know we're going against this trend and they could push us down. So maybe it might come down further. If we can start to flip, maybe we get above here, then it would be a buy signal, okay? But right now we're in this range right now, okay? We're consolidating, but what I look back at, here is where we had it come down and it went back up. It came back down in here, that top of the green, and went back up. We're coming right back down in here in that green zone again, but it's not yet going back up, okay? So the markets could maybe flip next week and continue selling off. Remember, we got to follow the daily candle, okay? So right now it's consolidating right in this zone, okay? So it's, yes, there's buyers there, but they're not convincingly strong yet. Now let's break it down to a lower time frame. Let's just say today it sells off on a Friday and we break this and we drop. Where could it drop down to? Get your levels real quick. Find pivot points right here. Why did Ron select this spot? I'll tell you why, okay? Look, right there it came in, rejected, back down. There, impulse, the volume held right there. That's when that blue candle closed above, and look at when it retested it, yellow line. Look at the number, 45,050, psychological number. So if we break today or on early Monday and it's bearish, 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 that's where the buyers could be, and then bring it back up, close above there, and then we have a bullish week next week. Then we look for swing buys. However, if it closes below and closes below, we're looking for swing sells next week, okay? Do you guys understand? But right now, it's just inside here. So let's break this daily now down into the hourly. Sorry, guys, I got to go faster because it's 10 after 9. We got to move faster. So our hourly candles now, okay, double top, dropping, lower lows, lower highs, double top again, lower lows, come back up. See how the hourly candles are struggling at this resistance up here? Then we really flushed down today at what time? This big black candle was 5 a.m. 6 a.m. we printed the lowest point of the day, which the hourly did continue to do their job and make new lows. So we could traditionally continue to push down today, okay? Because they did some new lows. Now it came back up. Where did it come into? Cut this. This is a structural hourly candle. Why is it? Because look, it engulfed, it closed below this blue one, and this blue one, okay? And it was very strong. Look at the size of the volume compared to these candles, okay? That's a big one. Cut it in half, okay? Right? This is hourly, so I cut it in half with a white line. We can find the point of control of this candle. Absolutely, let's do it. Grab your Fibonacci tool. Open of that hour, close of that hour. See, Ron was correct with guessing where's 50%. Look at the number. Look at the number. 45,950 on the dot is exact half of that volume. There's my red box, point of control, stretched into the future. Now I see it came up 7 a.m., rejected, came inside 8 a.m., rejected, retested lower high, and now we're coming down. This is how I scalp, guys. That's where if I'm waiting for it, pulls in there. I see that. I see that. If I was scalping the 5 minutes, I'm telling you guys the honest God truth, I would be selling right there, and my stop loss would be right above that red zone, and I would be looking to target maybe down there. If this was a 5-minute setup, that's what I'm looking for. But this is hourly. So, you know, like my stop loss would be much larger. My TP would be much larger. But the same shit, that's what I'm looking for as a 1-minute trader, as a 5-minute trader. This is hourly, okay? So this red zone, stretch it into the future. You see it's still pushing down. The bearish point of control on the hourly is still holding, okay? But we're coming near the lowest point of the day where it could just build. This is where it could just come down. Black, blue, black. Next hour could be blue coming up for Wall Street, black, unless we get moves above here or below here. Going down to the 5 minutes now, this is what we got, okay? So the 5 minutes, same shit. They do their, came in here, zone, back up, couldn't break here. Back down, bounced off the zone, right into 50% of that 5-minute candle, back down, closing bar, right there. That's a perfect time to, you know, if intuition telling you when to take a impulse trade, you see it came into 50%, that bar, structural bar closed below, that size of the wick, it opened, did not retest as it's breaking, you could sell and continue to move down. There's a 3-bar Tetris play. Cut that bar in half, came up, inside blue candle, continuing to drop down. Now, we got to the lowest point of the day right there, 620, coming back up. See how we're struggling to continue to move above that hourly red zone? Our 5-minute candles now are in this range. Coming down, going up, coming down, going up, coming down, going up, now coming back down. Okay, so what I would be watching on Wall Street is, are they going to come down and tag the lowest point of the day, maybe break it, grab liquidity, come back in, do something like this today? Possibly, if the market reverses bullish, or it's just going to continue maybe coming down, closing below, and today US30 is selling off, going into the weekend and everything that's going on with Iran and the Mideast wars, and money could be rotating into buying US dollar and treasury bonds right now and moving out of gold, going into oil and treasury bonds. Treasury bonds now are yielding a safe return. So maybe now money is rotating in different sectors. Oil could be looking to accumulate over the weekend. Gold and silver, not a safe haven anymore, might be dropping. Stock markets might be selling off, things like that. Money could be now going into more safer Federal Reserve US dollars and US Treasury bonds, as long as they're paying a nice yield of 4 or 5% safe. Okay, so this is what we got. Again, finishing off my chart, I had some fancy indicators. 9 EMA is right there. 200 EMA is up there, right above our red hourly zone. And our SST daily bar, 15-minute candle, is right here. Okay, I will revisit this. Getting closer to Wall Street. You see, we're just consolidating. Wall Street will make a move. Okay. So let's do Nasdaq now. Do you guys understand? Did that help, guys? That's how you do a proper, in my opinion, top-down analysis. That's all you got to do. No more or no less. That's perfect. That's good enough. I took my time with that because I want to teach, right? I can do one really, really fast because I know exactly what I'm looking for, okay? You guys will get to do a top-down analysis in 3 minutes as well, okay? Let's do one on Nasdaq now. Let's try and speed up Nasdaq a little faster, okay? Daily, real quick. Points of interest, okay? Look, it was a double top at the all-time high. Here was the all-time high right there, orange line, okay? Bring your zone down to the bodies, right? Right there. There's a couple bodies. Perfect. Stretch into the future. There's your double top sell, okay? But how long did it take? It took a shit ton of time to get up there, right? This was Halloween, 1st of November. The second time it came in there was February, right? All of November, all of December, all of January, start of February. That's 3 months before it came back in there. Patience, disciplined traders were sitting there pending and sold the stock market down. Will it ever come back to the all-time high? Right now it's diverging away. There's a lower high, lower high, lower high, lower high, lower high, and could be pushing down, selling down. But we're getting support down here, okay? So this is where buyers and sellers are going to fight on technology and tech in Nasdaq, okay? So we figured out a zone above us. Can we figure out supporting zone? Let's just figure out the lowest wick right there. Remember, the most obvious. Okay, now I see a zone at this yellow line. How do you guys not see the zone? There's a wick. Bring it right up to those bodies right there, right? Now you see it's green with the volume closing above. It already retested it right there. It retested it right there. Coming in, I see that big day. It retested March 9, Monday, and it's still green, okay? So you see we're approaching it, but have we closed below it yet? No. Have we bounced off of it? Yes, yes, and yes. Okay, so, but we're still, if we're buying, we're still counter trading this trend coming down. So it's difficult to say direction right now. Look at the daily candles, how we're just going up, down, up, down, up, down, up, down. It's barcoding, okay? But another important candle is this one right here. Okay, I know it's not structural. Like, listen to what I'm saying now, okay? This is where I freestyle my shit, okay? I freestyle. I'm a freestyle trader. Sometimes I go against my rules because I gotta understand what I'm saying. Just let me talk, okay? See what I say when a structural candle? It should be engulfing this blue bar to be a structural candle. However, this is FOMC volume. So this is where I bend my rules a little bit, okay? This is FOMC. Remember, this is a very important day in the markets. So I still want to dissect FOMC. So what I do is same shit. Open, close, okay? Someone's going to say, Ron, it didn't engulf. It goes against your rules. I'm explaining it to you. I understand it's going against my rules. But this is not just a regular daily candle. This is FOMC, okay? So we don't play games with FOMC. There it is. We cut it in half, find the POC of FOMC, and stretch it into the future, okay? Just like that, right? Now, let's figure out what's going on. So it came up bullish, 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 got rejected, did not trade into FOMC's POC, came back down bearish, did not fill that job, did not do that job to fill that wick, came back up, closed as a spin top. Look at how even daily candles, 24 hours trading can virtually close right where they opened. Those are those choppy days. That's a point of interest. Body close, body open, close on that day, and body open. Now today, let's follow it. We opened. Did the buyers do their job? They were bullish. They did not do their job to continue to advance to create a new high. So that affects the depth of market. That changes up everything. There's my highest point of the day, 24,442. Got rejected, coming back down. Now, did they take out yesterday's low? They did by a, like, look at how close it is. Okay, there was yesterday's low and they just took it out. So technically we do have a tiny lower low, but it's still being held up from this. So put a yellow line right there. If it ever revisits down there, it could be support. Okay, Look at the numbers, 23,975. Look at this purple line, 24,100, psychological numbers. And so far we're creating almost equal bottom low support coming back up right now, okay? So today is one of those Fridays, got to be careful. Could continue to come back down breaking lows, or it could continue to flip, okay? So on the hourly, because guys, it's 9:20, I got to continue moving. We're still very similar to US30, coming down, lower lows, lower highs, lower lows, come back up. But you see the hourly candles are failing up there. If we get a blue candle, guys, put an alert at that purple line. If you get a blue candle closing above there, retesting this, that's where we could have that major big move on Nasdaq, breaking through there, okay? So right now, this is an hourly structural candle. It closed below. Look, all of this shit, it closed below. If I was just to draw a white line at that pivot, guys, this is where now you learn structure, okay? That was a pivot, body, body, body. And look, now we close below it, okay? So that's telling me we close below. That's a candle we cut in half right there. We're at the halfway point right now, okay? I'm doing this live with you guys, okay? Open, close, half, right there. And our red hourly zone, we're right now in it. So Wall Street could definitely maybe continue to push down, okay? We're right in that red zone. Relax on gold, guys. I'm not on gold. I'm not, okay, I don't care. If you guys want to go on gold, but I'm trying to teach you this, okay? I'm trying to teach you a financial lesson that can change your life, but you guys are just worried about the gold chart. What are we looking at on gold? What are we looking at? Okay, it just broke down and coming right back up here. Did you make your green zone red? Okay. Okay, we just looked at it. Okay, but I was giving you guys the sauce if you want to learn how to do a top down. That's up to you. I don't give a shit. That's up to you. It's up to you guys, okay? And then you guys always beg to know how to do this, but you guys are just worried telling me to go to gold. What are we looking at gold? It broke down. Okay, I see it broke down. We're coming right back in. I see. Okay, guys, I trade 2 every day. Okay, but that's why stay focused, guys. Stay focused. Fuck, why can't we keep focus on YouTube? For the life of me, I don't know how to do it. But where did I leave off? Okay, we were here at the hourly. Look at we have a point of interest right there, still holding Nasdaq's hourly flow. Look at it. Got a wick, a wick, a wick, a body, and a body. Came down to lowest point, still holding. Good support here, okay? So what I do is I add an alert here, okay? I know some of you guys don't pay attention. It doesn't matter. But I want to make some money later today. I add an alert at this white line. I could either be buying or selling depending on the 5-minute volume, okay? So right now, let's see what we got going on Nasdaq. One bottom off the lowest point of the day, big resistance. Coming back down, holding. We got the same basic setup on 5 minutes on gold that we had earlier, okay? Can we get hourly volume closing above here? Transition your red to green, then we push up there. When it gets up there, it could break or it could just naturally come right back down, okay? Measure your moves, okay? So this is what we got going on the 5 minutes. Okay, we've already hit the lowest point of the day. It's been building higher high, higher low, higher high, higher low, higher high, struggling. And we're in a trend. If you want to draw a trend, you can literally see a trend coming up on the 5 minutes. Okay, will we have an explosive move coming right out of the gate of Wall Street, or it's going to be a fake out and then they're going to bring it right back down. And then we can look for either support at this white line or support at the lowest point of the day, or it's going to flip and we're bearish. Okay. So this is what we got going on right now on Nasdaq. Okay, you can even draw a channel, like you can see the channel. Okay, it's in this channel right now. Okay, add your EMAs, EMA 9. Oh, sorry, I have it on. I gotta fix this one. This is a new chart, so I gotta go to settings, green EMA. My bad. Give me 1 second here. Green EMA. Let me just make it a little thicker for people that can't see. And I got to add my 200 EMA. If you guys don't know, you should have your toolbox. Moving average exponential. We'll add it right there. I got to go to settings. Go to make it purple. That's the color I choose. Make it a little thicker because I got bad eyes. And then I go to inputs. I change 9 to 200. You can put 50, 200. You can put whatever number you like, whatever floats your boat. Okay, and then the last thing I do is the SST daily indicator. I already have it in my toolbox. I'm a member of SST, so I got it right here. SST Daily Bar Indicator, click on it. There it is. Okay, so it's on the daily. I can leave it on the daily, or I can switch it to whatever time frame I want by going up here, selecting 4 hour, 1 hour, 2 hour, 30 minute, 15. We're gonna go 15. We've been doing that all week. We're gonna stay consistent, okay? So that's NASDAQ, side by side with US30 right there. And now we go to gold, okay? So gold, look, came right into that red zone I flipped, and still look at the volume. Black, blue, black, right in this zone. So definitely it could break down. We're gonna get volatility at 9:30. It could come up. I'm chilling. I'm just on the sidelines, okay? Now, to those that were actually paying attention, congratulations. I hope you guys learned something. For those of you just screaming, buy, sell, go to gold, do this, do that, good luck to you, okay? I'm saying that with sincerity and with honest respect. Good luck to you, okay? But to those that are learning, I respect you guys, okay? Now, what do you guys, we're gonna watch at the open of Wall Street, we're gonna watch indices, okay? I'll flip-flop to gold, but you guys know, you got levels now. You guys know what to watch for, okay? We're barcoding. Black, blue, black, blue. It could definitely come back up, but it could be an impulse move. We don't want to trade impulse. It could be an impulse move coming down. We don't want to trade impulse, okay? Look at our levels. Just look at the structure on gold. Big double, big bottom, big neckline, okay? We're now trading down here. So it could come back down, be a big double bottom, or continue selling off. And then if it closes above here, we'll flip that, then we might have enough momentum to break. Look at the look at the yellow, like you see what we could do, okay? Just play these levels, okay? But we're gonna watch this, okay? So we got NASDAQ already breaking out, bullish, ignited. This is 5 minutes before Wall Street market opens. Thank you, Justin. NQ and ES rollover today. For those of you that don't understand what Justin is saying, for you guys that trade futures, there's rollovers in your contracts, okay? Going into new months forward, new everything. So consider that with your trading today, because that could affect the flow of volume. That could affect the volatility in your contracts. So thank you, Justin, for reminding us. Okay, guys. So please, if you're learning anything on our call today, okay, like the channel, subscribe. Thank you guys for hitting 94,000. And we appreciate that, okay? So thank you guys so much. Good Friday. Happy Friday. Eid Mubarak to everybody. I hope everyone has a great weekend, okay? Well, I'm not leaving. We're still here for 30 more minutes, but I just want everyone to understand, enjoy your time with your family and your friends, right? Don't get overly consumed with the charts. Believe me, I see some of you guys are spending too much time on the charts. You don't need to. Quality over quantity. Okay, know if you're going to study this weekend and you're going to put 2-3 hours in, allocate what you're going to do. Make sure it's stuff that you need improvement on. Don't review stuff if you already know. Like, that's why I always put a check mark or an X. Like, I critique myself. For example, how is my price action? Okay, I'm being honest with myself. I feel like I'm fairly good with understanding candlesticks. So I would, if I was studying, I would put a check mark. Maybe my risk management, I need to work on that. That's where I put an X on my risk management, and that's what I need to work on this weekend, okay? Maybe it's, I'm struggling at figuring out how to do a top-down analysis, okay? Then maybe I put an X on that, and that's what I need to work on, okay? Maybe things like that. You gotta critique yourself in a good way, but be honest with yourself. What are improvements you really need to work on, okay? If it's psychology or mindset, be honest with yourself. Work on that. Don't just say that you're perfect psychology and trading and you're trading with revenge trading every single day. Then you're not being honest with yourself, okay? Remember, if you're honest with yourself, the markets will pay you. If you're not, you're going to continue paying the markets, okay? Okay, so sorry guys, we're going to look over here. So Dow, I don't like it. I'll be honest, okay? My honest opinion. I don't like this. It's just playing ping pong, okay? The Nasdaq is actually trending, doing something, but it could be, you know, staircases coming up and an elevator coming down, right? Let's see what they do. You don't have to trade right away. As soon as Wall Street market opens, it might have a big, huge bullish candle, a bearish candle. Yes, it's exciting if you trade it, okay? But have rules. Either say I'm going to trade it or I'm going to wait 5 minutes. That's it. If you just say it to yourself, then you can control yourself. I'm going to say it to you guys. I'm waiting for the full 5-minute candle to close on either of these securities, on all three of them, gold, US30 and Nasdaq, no matter what. I know I might be missing out on a huge bullish candle. I know that. But what happens if I buy that and it's a wick and it's a big black candle coming down? Then what? Then what am I going to do? Right? It's not worth it. This is a crazy, this is Friday in Wall Street. You and I are nobody compared to Wall Street market open, okay? So just be careful. We know that there's going to be liquidity grab, fake outs, all kinds of shit. If you want to trade, that's up to you. I have rules. I'm saying my rule is I'm going to wait, okay? Now I see it now it's coming down black. They've had impulse breakout and now they're rejecting it back down. Here's the open. Ignited, flip blue, back down black, ignited, coming down, grabbing a wick, turn black to blue, right? We're still in this zone here, okay? So allow shit to open up. Okay, gold is coming back up blue. Holy shit, SMCI is down 27% to $22 right now. Remember SMCI had some negative news yesterday? They are down 26%. Wow. SMCI, that's super microchips. That could affect Nasdaq, guys. Tech, semiconductors, selling off right now. Are they going to buy the dip and bring it back up, or is this bar going to close? So remember what I was saying. This could be those stairs coming up and an elevator coming down. Notice how they faked out those buyers pre-Wall Street, brought it down, and now they're dropping it, okay? So Dow is moving through here. We got Dow and Nasdaq going opposite. Gold came right in there and continues to sell down. I like to see, I have an alert down here, like to see what gold will do down in here. Wow. Okay. So Dow came right in that red box, right at that hourly white line, point of interest, and getting rejected back down. Okay. This is a structural candle. Okay. If it was to close like this, engulf this entire zone, we're going to cut this bar in half. Maybe catch a pullback, maybe continue selling, or it might close above there and then we continue buying it. But I'm letting this thing close. 3 more minutes to go. Gold is coming down, like I said, I'm allowing it to close. All of these candles, no matter what. Okay, I can see it came down in the green box, picked up buyers. If it closes back above here, yeah, then we can maybe have a launch pad to buy gold. But see now how it flipped? Okay, so those sellers came down again, green zone. Use those rules that I told you. If you were in a sell, you had a great opportunity to close a full position down there because you got to respect. Those are the buyers waiting at the double bottom near the lowest point of the day. Okay, where it closes, I don't know, but let's continue waiting. I'm just going to check volatility index, see what's going on in the stock markets. Okay, so volatility index is up 3% right now. When volatility index is green, it suggests that the markets are red. There's volatility. If volatility index was red, that means that there's no volatility. Markets could be green, okay? Wow, SMCI is almost down 30%. Holy shit. Semi-micro stock dives after US charges employees with smuggling NVIDIA chips to China. Oh my God. Wow, guys. Look at this, how scandalous this shit is. Holy, smuggling NVIDIA chips to China. Wow. Wow. What's the point of that? Why? Why? Like, and if you're a shareholder of that company, like, do you see what I mean? Like, just some corruption and how shareholders can get screwed. Joshua, a graphic card and SSD card is so expensive right now. I could imagine. Okay, so we're closing in less than a minute. Dow came right in there. Red box pushing down. Okay, we might get a leg pushing down. Okay, what levels do we kind of got to break? These 45,845. Okay, Nasdaq is already pushing down, guys. If that closes like that, make sure we're closing below an hourly support. That's a nice bar to cut in half and figure out a point of control for any pullbacks to continue selling down, and could be targeting the lowest point of the day, the purple line. I'm checking spreads, checking everything. Gold came back down. Okay, so gold continuing to fill back down. That's could be a structural bar to cut in half. Okay, so we got to do a lot of work together fast. I hope you guys can do this fast with me. Okay, there's the close. Open, close. Half. Okay, it's bearish ignited. You guys got to watch. You guys got to watch and see for yourself. Okay. Over here, we got Nasdaq, same thing. See what I mean? That's why I don't like doing 3 charts at a time. I like trading one security at a time. Okay. Our 15-minute candle could push down. This is, if you want, looking for impulse moves during Wall Street. You know, it's got just some little wicks to continue to fill down. It's but you could literally wait again. You could go to lower time frames, 1 minute, and watch. Will there be a 1 minute candle close below there? Here's a 1 minute candle closing. There's the, ooh, not yet. Now open bullish ignited. Watch for a quick flip to the downside. Okay, it's bullish ignited. Bullish ignited, that 1 minute candle. It's bullish ignited coming up. So I know if that's the case, the 5 minute candle has a wick there. Now it's getting pushed down. So now that 1 minute candle got pushed down, it's going to close in 40 seconds. It's still holding. Okay. Notice, guys, I've gone down to the 1 minute now. Okay. I'm watching this 1 minute on Dow. Now it turned into a shooting star. Here's the close in the last 30 seconds. So will the 1 minute candle do its job and push that low and create a new low? Okay, it did its job now. Now we wait for closing volume on this 1 minute candle. Okay. Coming back up blue, holding. So that 5 minute candle is still dancing right around there. Here's the close. Gold is coming right back up. Yep. Okay, so that's still holding. Okay, so it's still on the 5 minutes, it's still holding. Got a wick, indecision. No trade yet. Let's see if Nasdaq pulls back into that red box, maybe selling back down. Gold, yeah, okay, so came in there. That was my signal to buy. I didn't. See, that's why I like focusing on one chart, guys. Oh, okay, but anyways, missed it. Okay, so I got to wait now for confirmations. Can it close above this zone? Can it build? Okay, so that's a proper double bottom so far, protected at today's daily low on gold. I'm not in. I'm still watching here. I was watching US30, nothing developed. See if it broke down. That's why I sometimes peek at the 1 minute to see what's going on. You guys caught the gold buys from the entry? Excellent, guys. Excellent. Okay. But you guys understand why that was the bigger bottom, right? Remember I told you guys the arrow down there, big neckline, down in there. Okay. That's the bigger one. But let's see if that blue volume can continue to come up. Maybe retest this, then we break out of there and then, you know, drive back up, right? But that's a good buy. If you guys got in a buy there, that's excellent. That's where you want to be buying. Okay. But it's got a huge range on this candle. Okay. It was from 36 to 60. Okay. Last time I checked, that's a $25 move on gold. That's 250 pip range candle. Okay. So that's massive. And it's got indecision. There's a lot of volatility right now. Okay. Okay. Now we got US30 pushing down with 90 seconds to go. Okay. So maybe we might get something too, right at the daily low, you know. Sorry, guys. I apologize for the flip-flopping, but it's not easy when Wall Street market opens up to be on 3 charts and you know, especially with this shitty volume. So just, we got to be patient together, okay? Just use proper risk management if you're taking any trades. It has not retested in this red zone yet. Okay, it came up, shallow pullback, lower high, pushing down. Okay, so look at the spin top on Dow. Broke down, but they did break a low, but it's coming right back up and 30 seconds to go. Gold had a very nice bullish move coming up, but now it's getting rejected back down. If it closes below the red box, it could continue to come down here, either accumulate or take out today's lowest point of the day. Okay, so let's be careful. I'm not in a trade yet. I will literally tell you when I buy or sell any one of these securities. Just, you got to kind of figure out what's going on, okay? Okay, so Dow didn't technically close below, okay, but it's ignited, could be ignited, pushed down. Okay, again, if you're taking that, you're trading on impulse, right? Gold trade, look, right in the red zone, so it's still red. Now we're getting that push down. Well, let's watch higher low if it's being built at that yellow line. This could be a flip of a candle, and then remember, filling that wick and driving. However, we can wait patiently for blue volume unless you want to enter. Remember that first scalp I had on this bar right here? I remember, it was this bar. Same situation. It could flip and fill that wick with the volume, okay? But you're also knowing that it could come up there, get rejected, and come back down. So maybe we wait. It's up to you. Like right there, there's the flip, but we wait. It's early, okay? Let it build. Got Nasdaq and US30 making some bottom, okay? So the wick is still holding. It's still there. We're still developing this. There's the pop, okay? So I know it popped a little bit. Will it retrace down? Here's the retrace down. Now, will it refuel itself? If it refuels itself, it might make sense to maybe continue to buy with it. Okay, it's coming down to the opening position. It's a spin top. Now it's turning black. Now it's coming down, coming down, coming down. Will it come back up? No. Okay, see that fake out what I was telling you, where it could turn blue, be a lower high, and drop down, just like that first one where I showed you over there, that earlier one. Now we watch it come down, back in the green zone, back at that daily point of interest, picking up that higher low. Now I know it picked up a few orders down there, some buyers, but it needs to come back up. Okay, so you see what I mean? If you trade on impulse, you got to know what you're doing. Okay, now it's coming back up. Now I know at least if I'm going to trade on impulse, it picked up some pending orders down there. Please, guys, pay attention. Now it's coming back up to the opening position. Now it's worthwhile. If you want to take the buy, I'm going to take the buy because I know it came down there and picked up a few orders. So now I'm in a buy to see if it will continue filling the current wick and fill to the next wick and maybe get back up to, you know, maybe we can bypass this zone with the Wall Street volume, maybe get up to that red box. So I'm going to buy on gold off of the retest, off of that bottom, but the candle has not closed. Okay, so I'm entering on impulse. And my stop loss, okay, look at where I'm placing my stop loss. I'm going to place my stop loss below the current wick, this blue candle, previous wick, and just be below the purple line. I know it's a huge stop loss, but that's why I'm going to increase my reward up to there, okay? So I'm in a buy on gold off the double bottom, the continuation. Okay, our 15-minute candle flipped off of that pending order grab, okay? So I can pip and dip literally like right now if I like. Okay, that's 85 pips up to that zone, would be 100 to clear up here, and then 125 to get up to there, okay? Maybe I'm making, again, another massive mistake by not taking out my 80, 90 pips. Again, but that's see, I'm too much of a scalper. But regardless, let's see what happens, okay? Still have the protection of the green zone below me. Let's see if it can continue to build. If we get blue volume, we're gonna make this red zone green. Maybe we continue to build off of it to get up to this red zone. Okay, so we came right into that neutral zone again. Okay, so I'd like to build above that, right? So we're coming back up. Good 15-minute candle building. It's gonna close in 90 seconds, so we're right back in there. There we go. Okay, so can we continue just to fill those wicks and extend out of here? Perfect. Perfect, guys. Yes, that's good. We got our 15-minute. We're about almost 100 pips.
to there, okay? So with 100, I'm going to a break even. Nasty rejection in there. I'm at a break even now, okay? So I'm not fooling around. Break even. I'm not risking no more capital. It's Juma Mubarak. We're not going to do anything silly. We're not going to lose any of our capital. Now I'm just playing with my profit, which is pretty stupid, where I should have been at 100, taking out 80%. I didn't again. So the market may come down and punish me unless it can build and close above here. So worst case scenario is I'm at a break even. It's hard to educate and trade live in Wall Street too with volatility, but let's see what happens, okay? I have no risk in the trade. That's what keeps me sane. Okay, so hopefully this volume continues. Buyers continue to ask to trade high. We can close maybe above this body. Okay, 10 more seconds to go into the close. Dow making a move. I will get to it in 1 second. I have to follow the close of this candle. I'm in a trade. 1 second. I'll get to Dow and Nasdaq. My apologies. Okay, here's the close. Okay, so it's a closed candle. I can just bring my cut line to 50%. Now I see, oh man, this is a nasty neutral zone, this entire call. Okay, so we got a nice higher low. Let's see if we can just build those wicks and just break out here. This is when I want an impulse move, a new 15-minute candle to build right now and just impulsively fill. Doesn't have to fill too much. Like we just got to fill up to that wick, up to the top of that red zone, without coming all the way back down into break-even territory. The red zone is now green. Okay, sorry guys. Red zone is now green. So if it pulls back, if you're looking to re-enter or continue, but I'm looking to see if we can continue to build. This is a nasty, nasty neutral zone in here. It's been holding today's volume this entire session. Look how small this zone is. So we can easily accumulate this and break out. Man, I would love that. Oh, those nasty rejections. Holy shit. Okay, Dow. Wow. Okay, Dow, guys, Dow. Dow closed above the red zone. Red to green. Okay, it already retested with small wick. That's a scalp move. Okay, retested, but look, holy, that's crazy volatility. But if I was looking at Dow, I potentially would have bought that. Okay, and now we're getting crazy moves right now. I'm still in this, still holding gold. They almost got my break even. I'm at 54. It's at 56. They got me, okay? They stopped me out at break even. Oh, so I left 160 pips on the table today. I'm going to write that in my journal. Stupidity. I left 160 pips on this candle and this candle. 160 on the table. And I made already 100, but left 160. That's just silly trading. But look at how tight it's trading, okay? So I'm trading with risk management, guys. So I went to a break even quickly. Still watching Nasdaq. Guys, Nasdaq right in the red zone, coming back down, okay? So Nasdaq could continue to sell off, guys. Nasdaq might be the play of the day. Amari, you secured your pips. Good, good. As long as someone secured, I'm happy with that. Okay, I didn't, unfortunately, but I'm okay with a break even. No worries. Okay, just shows how tough it is to break this neutral zone. My goodness, this entire call, it's been this entire call. Holy, okay, but a break even means I didn't make any money. I didn't lose any money. I can continue to trade if I want, but I have to, trade with rules, okay? Otherwise, I'm just going to continue doing this, mistakes, leaving money on the table. Lukman, it's not easy to trade and educate live. I try it. Like, believe me, I tell everyone, try it. Open up a YouTube channel and try and teach live. But you're always going to think of the person on the other end when you get in a trade. Like, I understand my risk. Believe me, I understand my risk. I'm telling you. But there's other traders that just listen for a buy and sell and they over leverage. So if I don't show where my stop loss is or protect it with a break even, I feel like I'm responsible for them, and I shouldn't. We're all adults here. We trade at our own risk management. I'm here for entertainment and education, but I understand traders on the other ends, and I feel like I'm responsible. I'm the pilot here. So I have to trade with proper risk management, but I'm here for learning, guys. I'm here for learning. I'm not here to showcase how much pips I can make in a day. This is not a competition of who makes more pips or who makes more money. I'm not that guy. There's other YouTube guys for that will show you that. I'm not that guy. I'm telling you right now, I'm not. Very humble. I don't show you my cars. I don't show you how much money I make. I don't show you nothing. I show you my skills on the charts, what I know about price action. If that's what you're looking for, I'll help you with that. But if it's other things, I'm not that guy, okay? I'm not here to compete with who's better trader. I know my lane, I stay in my lane. I do what I do for myself, but I want to continue to help others that want to learn this. But you can see, guys, a lot of times if I didn't go to break even, maybe the trade would have came down and hit my stop loss. Then, so you got to learn. It's okay to take a break even. A break even to me is like a winning trade. But you see, 2 times I left money on the table at these zones where I knew it was driving into these zones. So next time, like my next time I trade, I have to learn from this. That's why I stick to my 80-20 rule as much as I can. When it's coming up there 100 pips, I take out 80%, I leave that 20% runner. Right? I did not do it in this situation and that situation. And now I look back and yes, it affects me, but knowing that I have a break even, I'm still good. Because if I didn't, now look, it could be coming after my stop loss. And then I'm actually losing capital to the markets. And that's when it sucks as a trader, when you're losing your money, okay? Amazing. Thank you. You are Chinese and you listen to the class 3 days. It's clear. Please continue. Good. I hope I'm reaching out to some people that want to learn to trade, because we have others that just come on here just looking for buys and sells and spamming the chat. Right there, guys. Like, I feel like I missed out on Nasdaq. Okay. And then someone's going to say, well, Ron, you did not take the sell, so you're just talking. Okay, I understand. Maybe I'm just talking, but did I not cut that bar in half? Right? It came right in there. There's the rejection and there's the move down. This is the candle I'm looking to scalp. This one, just this black one. Why? Because I know, just looking, visually looking, I can see that black candle closed below 50%. It already hit the point of control zone, closed. It's got a short wick. That's a candle I love scalping. But like when it opens, comes down, break of the wick, my stop loss, if you really want to be tight, I would have put it above the red zone, but that's where I would be looking. Right there to take some money out on just that candle. Okay, it meets requirements of the setup. That's a 55 pip move. I would be pipping and dipping out of that, but today I'm holding trades. But that's the exact setup that you're looking for. Guys, take a screenshot of that. That's what you're looking for on a daily basis. There's the big structural candle. Close, we already found the point of control. We cut it in half. We found the point of control. Naturally, the buyers bought the dip and it retraced. If you're a buyer too, you got to understand you're in the money, but you're coming right into a seller's point of control. They impulsively broke it out. It came back down and closed below 50%. And there's where you can continue, cut that bearish candle. It came down right now. Okay. Same with Dow Jones. Okay. There was a little fake breakout there. I understand it closed below, it retested. It was a good buy. But even if I took that buy, I'd have a stop loss somewhere and I'd probably be stopped out. It looks like a fake out. Now it's coming back down and coming back down here. See, we do not have any black volume closing below here. If we do get that, this could be where Dow sells down. Okay. Just continue watching. Gold now is breaking the lowest point of the day. So it's still holding. Now it's pushing down. Okay. Gold will be a candle that you're going to have to cut in half and find the point of control, because now we could literally continue selling down. Now, breaking the low of the day, my next hourly support is right there. There's 5-minute support right there. 4,600 right there. So if it comes all the way down there, I'm telling you, there could be buyers waiting right there. How do I know that? Because I can look back and see how it was trading at Thursday at this time. It created a bottom, went back up, came back in here, accumulated, and took off. So it's now retracing back down into this zone. So it could literally come all the way black and move back up and get rejected and go back down and come down to this white line. So I trade from the lines to the lines. Okay, guys, but that's it for me. Okay, so I'm not going to continue trading. I had one win, 2 break evens that were in profit. I made my mistakes, but that's it for me, guys. So I hope everyone enjoys their day. So Monday we'll be coming back Monday morning again, this same time, 7 a.m. to 10 a.m. Eastern. We'll have a new schedule next week. Maybe we'll have also a Monday Tokyo session. I'll see how I feel that day. And later today, guys, we're going to have a webinar uploaded to the website for a mindset psychology website. I hope you guys learned something this week. We were live with you guys all week on YouTube. Hope everyone learned something from myself, from Dave, from the snipers in Discord. If you want to join the free Telegram, it's linked right over here, pinned at the top of YouTube channel. Thanks again, guys, to 94K subs. We appreciate you guys. And if you want to join the team, we'd love to have you guys on the team. 50% off on all the memberships we have here, guys. Lots of education and free blogs for everybody. And thanks once again, guys, to everyone subscribing to the channel. We appreciate you guys so much. I'm losing my voice right now, so I gotta conserve it. Trade idea? Yes, sir. Let's go to the trade idea. Okay, guys. So trade ideas, okay? Not only do we do live analysis, but trade ideas, okay? So sell on gold at that 46.52. Originally, when we started the call at 6.25, if you continue to watch the signal, the sell 52 to 24, a 0.2 lot size yields a yearly membership at SST. So Dave, shout out to Dave. This was the big signal and the big sell from 52. Okay, so over here, we look at 52 earlier when we started the call. Remember, 52 was right over here. So now static locations continuing to close below. We've got lower highs off the top, lower highs, head and shoulder pattern. Now, when we look back at it, I can see left shoulder, the head that broke out, we're back down. Right shoulder, it took until Wall Street to really redistribute the volume down. So maybe we'll reach this point, okay? This zone now, the big one, green one, is a red zone now, okay? So like this one is insignificant. We can get rid of that. Like this is where you can tidy up your charts now if you're going to continue to trade. This was this block right here was very difficult to break today, okay? So this is a red zone now. Okay, so anytime if gold comes back up, okay, you could be looking come back up and sell back down, right? Okay, so that's your head and shoulder pattern, okay? So big signals, guys, okay? Hopefully you guys caught those, got some pips on today's live. You know, I'm telling you guys, if you want to learn scalping, you got to be fast, okay? I'm trying to showcase that to you guys live. That's why when you guys say, Ron, let's do 1 minute, 1 minutes are extremely fast, okay? But you have to have also the broker that can also fill you quickly and where you don't have spreads going against you, okay? So now Dow is closing below this. So just red to green. Right now, I wouldn't even trade inside here, Dow. See this block? Like, look how long it's been accumulating in there. Okay, there was one false breakout right now when we opened, like right there, and then came back down. We're right back in here. So Dow is not going to trade in here all day, okay? It's potentially, we've got a selling day in the market. It's going to maybe come down. What I would wait for is a black bar to close below. Maybe come back, retest, then take out today's daily low and continue to drop down to 46,500, okay? Nasdaq is continuing to push down and break the lows of the day, okay? Could be a selling Friday. Contract rollovers going into the weekend. So much stuff going on around the world. Maybe markets will sell today. And SMCI is down 30% for employees smuggling chips to China. Unbelievable. Unbelievable. But That's it, guys. I'm done. Congratulations. Hopefully, guys, learn something. We'll see you guys on Monday. Shout outs to Dave. Shout outs to the snipers. And have a good weekend, everyone. Everyone, enjoy your Eid if you guys celebrate. And have some blessed time with your family. Eat lots of baklava and have a great day today. Thank you, guys. Thanks for the likes. Subscribe to the channel. Thank you, guys. Have a good day, guys. Justin, Sang, Joshua, Corey, Christoph, Val, Kevin, Steve. Okay, have a great day. Take care, guys. Have a great weekend. See you guys.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.